Yes, sir. I have made you the presenter. Good morning, dear participant. We are here for the session of day 4.
Good morning,
This
sir.
is 2 weeks faculty development program on entrepreneurship, sponsored by the Department of Science and Technology, Government of India. So we have 3 speakers today. Vivek sir has joined with us. Sushil sir also has joined with us, and the Manvin Chadda sir. So I would like to invite our first speaker, Vivek Suman sir. He is the member board of director, MIT World Peace University. Very experienced financial sector professional with over 20 years of expertise. And he has also enjoyed leading the finance team as a CFO and implementing those M&A models. He is skilled in corporate strategy, investment banking, and business process re-engineering with proficiency in regulated sector, system, and technology. He is recognized as a leader in the field, receiving multiple CFO of the Year awards and renowned for the successful merger and acquisition. He is a collaborative and result-oriented professional dedicated to fostering talent and driving the organizational growth. He is regarded as a leader in this sector and has received 3 CFO of the Year awards in a row from the Transformance India CFO Story Club honors in 2022 and 2023. He is helping startups and holding companies like to prepare and execute the M&A life cycle, including raising the fund and creating sustainability programs. So through the development of winning financial model and deal structure, he has taken small businesses, SWFs and government companies through IPO and private placement in India as well as in the Middle East. So we are very grateful to invite you, sir, and we are thankful to you for accepting our invitation in this 2 weeks faculty development program. Welcome you, sir.
Thank you very much.
Over to you, sir.
Thank you very much, Gauravji, and thank you very much, 100 plus participants. We think it will reach to 300 like the same like last time.
Yes, sir. Yes, sir.
So welcome everyone to the program. Somehow I am not able to today share my screen properly.
Yes, sir. You can share, sir.
Is my presentation visible, Gauravji?
Yes, sir.
Okay, so ladies and gentlemen,
your screen has been shared, but presentation is not visible.
So not visible, sir.
Yes, sir.
I think it is visible now.
Yes, sir. It's visible.
Yes, sir.
Now it is visible, sir.
Okay. Give me a sec. Okay, ladies and gentlemen, thank you very much, Dr. Gauravji, Dean of the College, University, as well as eminent personalities who are joining from all across India. It is my privilege to join you on this journey of faculty development program. And today my topic is quite critical and typical, related to finance industry, but for any entrepreneurship or development program, entrepreneurship development program, or be it education to students who are planning to start a startup, becomes critical. In a sense that even though it's a hardcore finance domain, but without this particular topic, none business can sustain, be it a small, big, or a large company. And the reason is simple, that working capital is nothing less than a part of body which is I say blood running into the vein. Yeah. So let's delve into the topic direct right away. And I want to start with, if you do not manage working capital, which is our topic of today discussion, properly, you have a threat to your business. Now, this picture which is in front of you, I think all of you can relate to and know about it. This is one of the Shining India, Rising India, a flagship company which has come into picture when aviation sector in India has opened. We had Indigo, we had before that Air India, which was struggling, and then the low cost airlines has been promoted and given a reason to come in place, where the India was becoming a poor country from a poor country or a developing country, and started a journey to become a developed country. So low cost airline has empowered a middle class of India, yeah, where they used to be called in international lines a cattle class of India. So to empower them, government has promoted such kind of company, and a lot of innovative company came into foray and try to make a difference to the society. We know about Vijay Mallya ji, Kingfisher Airline, but recently we have been also, jolted by another airline which is also struggling, even though it's a forceful struggle created by the promoters, but it has definitely some kind of DNA involved in working capital. So let's talk about, if you do not manage properly a working capital, what happens? Yeah, it is the most common reason. And because look, if you don't have working capital, you will be definitely get into bankruptcy. That's how it works. It's as simple as that. Yeah, you have a negative working capital sustain over a period of time, and not too much of time. Within 6 months to 12 months, you will be declared as a company which is near to bankruptcy, and your bankers, your stakeholders can catch you there and take you to that route. And this is exactly as happened to a famous airline called Go First. Let's hear about it from a medium of AV, audiovisual.
Well, the big story that we continue to track, there is turbulence in Indian skies again as another airline is strapped for cash. Go First has decided to file for bankruptcy. The airline has stopped all flights. Reports say there is a severe shortage of funds. Reports also say that Go First owes more than $800 million to its creditors. Now, Go First has blamed Pratt & Whitney not only for faulty engines but also for its insolvency.
Unfortunately, Pratt & Whitney, the engine manufacturer, has completely deceived us.
Go First has been granted bankruptcy protection by the National Company Law Tribunal.
So basically, the story is very simple. Yeah, I'm not going in great detail of this story given the limited time I have today, but the story remains very similar. The company, which was running very good for some time, about to go for IPO. Please understand, any company who prepares for IPO has crossed a threshold of being an unstable company. Yeah, that's a basic assumptions. However, in some cases nowadays it's difficult to judge that, and the good cases are available like Paytm or Zomato or Nykaa, a makeup queens company, of makeup queen of India company, Mrs. Nair company, Nykaa. These all company has defied that definition, but is still generally, uh, if a company is IPO bound, it is assumed that they have crossed the threshold of being unstable. However, in 2021, that scenario immediately after opening up of COVID restriction, that had changed. Government tried to protect a lot of airlines at that point in time, but you cannot protect an airline or a company which has a physical difficulty. And that was the case of a giant, which we know as a Go First. What exactly has happened is a matter of debate, but definitely one thing came through the AV as well in foray, that Go First claimed that all their White Whitney engine, which you see in the aircraft, both sides of the aircraft wings, started failing one by one. And given that company has to go and negotiate with White and Pitney to replace, because you cannot afford a airline without an engine, because India engine in a airline cost not less than 60 to 70% in sometimes. Yeah. In that case, they were struggling. Engine repairing or doing MRO, maintenance, repair and overall, is a different discussion. The trouble was, if you don't have airline, you cannot service to your client. Yeah, again, simple calculation. So their sales started coming down. As the airline numbers were reducing, their sales started getting hit. They start negotiating with White and Pitney, but the trouble started. Labor cost, which is oil, which is a jet fuel for any airline, also reduced. If you have less airline running, you have a variable cost reduces. That was not a problem. So you see the gross profit was still in green. However, the fixed cost, which we know in terms of human being, you cannot fire people straight away as you are not doing that. Yeah, it takes time. So those costs remain intact. Yeah, be it a cabin crew or your hostesses in the airline or a ground staff. That started pinching, specifically the pilots started pinching the airline profitability in big way. At the same time, as the airlines numbers were reducing, the interest, because most of the airline are hired either on dry lease basis or we say wet lease basis. Both cases, the interest remains enormous for airlines because most of the airlines are leased. That started pinching the airline, and airline started posting quarter on quarter losses. This is the exact case of working capital mismanagement. Even though there are some unfortunate event happening outside of management control, but maintaining your cash remains critical for any organization. That's the topic today we are going to discuss. And I relate in a business 7 category I categorize, where I compare the human anatomy to business. And in that comparison, I believe working capital is blood. And if you are short of blood, you know what happens to your body. If everybody agrees to that, let me give you some facts and figure which will illustrate to you that what exactly is the situation right now on working capital funding front, where government is trying to incorporate different kind of initiative, specifically for MSME, where you are going to get even loans or grants without having a collateral. And we have definitely learned in the previous lectures about those. So what's the gap? Why it is so important that, okay, you can have losses, but still if you have some money coming to you in a form of efficient working capital, you can still manage your rough time and get through those kind of period and come with a strength to strength. Now, as you are aware, any business, including bio entrepreneurship, where the program is talking about, is not for faint-hearted. Yeah, and starting a business in India is no exception to the world, where MSME is a backbone of the country. Yeah, it is a game of skilled and informed, and where most of the informed and skilled player definitely wins. Now, there is a huge borrowing gap in MSME, which we have to understand. There is one number which fall down from 195 below, because when I'm projecting it is getting distorted, but that's the funding demand in $1 billion. 1.955 billion dollar is what currently our country demands through MSME sector. We have 2 crores of MSME altogether. Yeah. Debt demand out of that is approximately $819 billion. And you know how much is fulfilled? Only 1/4 of that, nearly 1/3 of it. So 2/3 of that number means 75% people are still asking from bank or different institution this fund, and because of that, they are near to their bankruptcy or liquidity crunch, if I may say. This is a research done by Avendus Capital, and you know there are two type of capital which is available to you or to any startup or an entrepreneur. One is, of course, long-term capital, and another is short-term capital. When you start a business, you generally try to go for a long-term capital and you ignore short-term capital because your operation is not in place. However, as you learned in the previous lecture about pre-feasibility study, you definitely need to take care of your short-term capital, where the working capital management plays a critical role. Long-term capital in general term is strategic capital, which you take in form of equity or through capital market. Yeah, if is miss, we need to say excuse if we are sneezing. So if somebody can mute, that will be better if he's not well. And all sympathy of mine is with him. So if this is strategic capital, you can get it through the capital market, either through the stock market or the organized bankers or other VC market. While the short-term capital is difficult because it's a huge market. In a sense, it is given directly by the government or by the different institution, mostly over the counter. Yeah, this is a short-term fund. You need it for running your 0 to 1 year of operation. So 0 to 20 years, you think about your long-term capital and funds, which comes through either founder's equity or 3Fs of the founder who supports them. And nowadays, even if you have heard me last time, I have said that come to us and we will take you to the other people who can fund other than your 3Fs. 3Fs, again, I will repeat, is family, friend, and fools for the people who have not attended the lecture. Correct, sir. So working capital, what exactly it is? Now, I am not going to go into synonyms of this and go into a detailed calculation because that will become too laborious for you, and that document is anyway available on different platforms. What I'm trying to illustrate to you a simple equation and facts which will empower you to handle this area, or when you are teaching to your students or entrepreneur, working with them, at least convey the real message behind it. So on that scale, if you allow me, I will explain you that how working capital works. So working capital is basically operational liquidity of the business, which gives like blood in your body. It gives it empowers your business to run efficiently, effectively, and as per your vision and mission of your company. Not having it definitely works against you. It doesn't take a lot of time to take it to any doctor. Within 6 months you will be dead if you have such kind of situation. How this situation arisen? It gets arisen through this simple equation. Current asset, which is basically, and I will show you with example what exactly is current asset. If you have a clean balance sheet, it will be easy for you next time to locate it. So that current asset, which is basically your cash in the business, which an investor brings into play through equity or other means. Secondly, any asset which is consumed within 1 year is generally inventory. We assume that inventory is for purposes, or any other current asset which has a lifespan before. It could be your deposit sitting in the bank. That all comes as a part of current asset. While the current liability, again, we defined is that whatever you consume within 1 year, which is due on you within 1 year. The difference between current asset and liability. And if you take the difference between these two, obviously you check your cash and what is due within this period to pay off. If you take the difference, I'm just giving a simple example. It gives confidence to any entrepreneur to take this to a different scale. Yeah, he plans for next cycle of his business if there is a working capital available, which comes from simple calculation. There are different type of working capital. Let's stick with two major kinds, because when you will approach a banker or your team approaches a banker, they understand in this language. First is gross working capital, which is basically all of the current asset requirement is your gross working capital. So basically that's what you need to focus on. This is the money available to you. This is the material available to you in terms of inventory. And this is the deposits or other means from where you can withdraw cash very soon enough to, you know, to manage your obligation which are due within 1 year. So if I'm talking all the current asset in my financial statement or my books is gross working capital. However, when I take a difference between these two, current asset is CA and current liability is CL. If I take a difference between these two, we have a net working capital, which has to be financed through long-term finance. People think that let me ask equity guy or the guy, I'm running a company, let me put $1 million to run my net working capital. That's not a right approach, because then cost of capital will kill your business anyway. Otherwise, that's a matter of discussion. Another topic of capital funding, venture capital, which is a lecture tomorrow we are doing, I believe. Gaurav, am I right? Tomorrow we have a discussion on that front, that how you should use your long-term capitals. Yes, to make the business sustain for inflation. Yeah, like Tatas and Birlas. However, for working capital, you definitely need to create a system through short-term. The other major important aspect of working capital is current ratio. Again, a very simple ratio engages two same line items in your balance sheet, which is current asset and current liability. If you take a ratio of these two, it gives an indicator where you can judge you are doing something right or wrong. And as an entrepreneur, professor, or a professor of an EDP program, you need to definitely understand this indicator in terms of industry standards. So that's my responsibility today, that next 30 minutes, I will try to cover those aspects. Now, what I will do here, because now I am going to go in nitty-gritty of this discussion, I will open a discussion forum because people have already opened their mic. So let them ask questions if they wish to, and I will take a break of 2 minutes here. So, Gaurav, please go ahead, open the mic for people who wants to ask questions.
Yes, sir. Yes, sir.
And we can
participant has can open the mic and switch on their camera also, sir.
Hello.
Yes, you have to tell your name, your college which you are presenting, and then you ask a question. So that will be easy for me to understand.
The Priyank from Rutgers University, the agribusiness professor, the School of Agriculture. I just want to know what are the common sources of short-term financing that startup can utilize to address temporary gaps in their working capital.
Very good question. Let me others question as well, and then I will combine and answer. Please go ahead, others.
Good morning, sir. Am I audible?
Very much, Shweta Misraji. Please go ahead.
Yes, sir. Sir, I'm Shweta Mishra from Dr. D.Y. Patil Institute of Pharmaceutical Education and Research. Sir, I wanted to ask that. Sir, Pimpri.
Pimpri.
Yes, sir. So I just wanted to ask that how to prioritize that this particular thing is going to be my priority, and here I want to fund much as my liability or as my asset, as compared to other things I can put this on hold on if I am in the shortage of funds or so.
Very good question, Swetaji. Very good question. I will answer that as well. Let me hear from others as well, and then I will combine. Just for a
Sir, good
caveat,
morning.
Sure, sir.
ex-DY Patil student as well. Of course, 20 years.
Oh,
Go ahead,
oh, great, sir.
Ramji.
Sir, good morning, sir. Am I audible?
Absolutely, Meenakshi Sundaramji. Welcome back.
Welcome,
How is
sir.
your
So,
program?
yeah, it was a nice program, sir. But I have a small doubt. Can you give the details regarding, because we understand that many of the entrepreneurs, they fail within 5 years. So they just start as a small scale industry. So can you be specific with that? How much working capital is needed to run the business for the first 5 years? Because at least to achieve the break even point.
Absolutely. A stunning question, Meenakshi Sundaramji. Difficult to answer, but I will try my level best to answer you pragmatically, which enables you to take this information forward. Thank you, sir.
Thank you, sir.
Okay. Anybody else? Anybody else? Any other question? Okay, so let me answer these three first, and then we will take others' question as well if somebody is coming up with. First of all, let me take Meenakshi Sundaramji question because that I remember very clearly. So I will answer that straight away. There are ratio, Meenakshi Sundaramji, because look, you cannot have a standard working capital number, yeah, for each industry, because each industry has a different size, shape, and operation, as well as I told you, as we discussed in the last discussion as well, that what you have to take care about the business is 4W and 1H, yeah, which you teaches your student all the time, that ask these five, 6 questions and you will have the answer. So as each business has its own different DNA, as well as like our thumbprint, it is different. You cannot have a standard number for working capital. But there are 2 answers still to your question. First, in terms of scientific method, which generally people uses and which I'm going to discuss now in my lecture as well, which is in form of certain ratio. And that's why I told in my discussion that one ratio which becomes quite imminent and anybody and everybody should use to judge a business is current ratio. So if current ratio is certain number, what it means and whether this company will sustain or not next 5 years. So that's the approach number 1, which we will discuss immediately now going forward. Second approach is government has collected enormous data and created certain kind of structure. Yeah, there you can, if you want to judge that what should be the ideal number, that number you can refer to. For example, government says that under CGT SME scheme, you can get corporate guarantee by the government. The scheme is there where you can get up to 5 crore and even sometimes 10 crores based on the banks. However, 5 crore is official figure. Out of that, 50 lakh, they say, should be used under working capital. So approximately 10% of your debt which you are taking should be going to your working capital. And again, by thumb rule, the debt is always 50% to 60% of your total capital requirement because you have to put your guarantee. So in that 10 crore, 1 crore should be your working capital. Of course, this cannot be a answer. This is a government calculation based on different industry and 2 crores of MSME they have seen and they have come up with this number. So this could be one answer. But the second one is more interesting and where I will also try to answer. I think the first speaker name, I could not get it. Can you again unmute yourself and tell your name, please? Sweta Mishra. Priyank, okay, from Galgudi University, Agribusiness. So
Yes.
your question, can you repeat your question once more, please?
Sir, I just have a question that
what are the sources?
Common sources of short-term financing that startups can utilize to address temporary gaps in their working capital?
So again, there are number of options are available, but 4 are critical and well known. One is the cash credit. So you create a cash credit with your banker. From there, you need to fulfill your obligations. Second is overdraft. Yeah, overdraft facility also helps you. It's a kind of credit card for you, which banks create for your business. Third operation is through working capital loans. Specifically, banks are giving in different kind of different name, format, and structure. And fourth, and not to be avoided, is government schemes, which also provides you working capital limits through different, like Mudra scheme, etc. Again, you have to refer back our previous lecture where we have discussed all of those. Yeah, these are the common names. However, throughout my lecture, I will try to illustrate to you how people are raising. Yeah, this mismatch between current asset and current liability. Otherwise, most of the smart trader of our country, the jugaad trader of our countries, they are the maximum 90% of this MSME, approximately 1.9 crore, or you can say 2 crore approximately. They manage through taking a credit from the supplier. That's another way to manage, but that's a part of your working capital, net working capital itself, current asset minus current liability. If you are stuck with that situation where you don't have a positive result, then you go to external medium, which are these. I hope that answer, Priyank Sambaji, your question. And now let me go to Sweta Tiwari's question. Swetaji, can you repeat your question as well? Sorry, Priyankji, please. You are saying something?
No, sir. Satisfied.
Okay, that's good. Thank you. Sweta Misraji, can you repeat your question again?
So I was just asking that how to prioritize that if
Priority.
I'm having shortage of fund, then how to prioritize? Yeah, that this particular thing I should invest on in the first manner, rather than these things I can linger it on and this can be done later on. Because if I am a new, like my students, if they are new into this field, so they don't want to compromise in their quality or so. So in that manner, how to prioritize the things before getting into the capital or the funding?
It's a subject of research, Swetaji. In the market, this is an area where people like you, PhD scholars, should research and come up with the exact prioritized area based on the region, based on the industry, based on, you can select any industry and come up with that solution. So that's the idea to all through 250 members who have joined us to work on, because that area is very open right now. Every industry has its own kind of structure, and they operate accordingly. However, there is a thumb rule which we use as a finance professional, and how we prioritize is based on the emergency and based on the dueness. Like, for example, I can give you example, employees. Yeah, the moment it hits the 38th day, you cannot delay them. So first priority is human being. In service industry specifically, it is, you cannot compromise with this idea. So first is human, which obligation you need to fulfill partially. And this is the best example you want to see. Go back to Corona time, when everybody, irrespective of their stature and company status, has struggled their working capital. Yeah, and the ones who has managed it cleverly are today successful businesses, be it any industry. Okay, so otherwise there was a huge churn. Churn means people leaving the company. Yeah, and that has happened when they were not happy. So few people come up with that, okay, pay them partially, pay them in tranche, emotionally support them, but that becomes your priority. So the first priority is human, which is of course due on that day, and they cannot compromise beyond 15 days. So that's the first priority. Second priority is your operation. Yeah, so if you don't have product to sell, you are dead anyway. So better your inventory should be your second priority. So these are the thumb rule. My point, where I started, that please do some research on it, because industry has a different kind of structure, and that also changes the moment you change the geography. Like in Gujarat, you go, everybody knows without supplier credit, nobody will work with you. Yeah, so people have made up their mind, even though they are the shrewd businessman, they have they have a certain kind of structure where instead of 30 days credit period, people get 60 or 90 because they support each other. Yeah, so the geography also changes. So there's a matter of research. Please do some research, so that will become handy for us to refer in next lecture and discussions on industry forum. Thank you very much all. Let me go back to our presentation. Anybody has any other question? Otherwise, I will jump back to my mood point. Is my screen visible?
Yes, sir. Yes.
Okay. So coming back to our story, these two fundamental, the working capital calculation equation, which is current asset, is current liability, and current ratio is basic fundamental on which you can judge any company future. So now I'm taking a airline balance sheet, which was available till 2020 when they were for IPO. This balance sheet, if somebody has to calculate the current ratio, indicates that this company is suffering. And how I am able to say that? See, here current asset of 2020 comes out to be 1.246, yeah, 96 crores of rupees. That's their current asset, which is a total of, you see here, inventory, financial asset, like trade receivables, cash and cash equivalent, or any other financial assets. Those all, if I add together, so what you need to do to calculate our current asset is go to balance sheet, find the current asset heading, take the total of that. That is the number which will feed in into your working capital. Isn't it simple? Give me a thumbs up if you think, if you have access to balance sheet, this is the simplest calculation you can do in your to judge any company's lifeline. Give me a thumbs up if you believe so. Yeah, so I know people are getting what I'm trying to convey here. And second number is also same. You just need to go to the bottom of the balance sheet where current liability is mentioned. Of course, it includes financial liability, like your loan current portion. So you have taken a loan for 10 years, but there is every quarter you have to pay a certain amount, or every month you have to pay a certain amount. So that amount is your, without the fixed part, principal part of it, is a part which is your financial liability. So that need to be added along with your supplier's credit. The supplier who gives you any good on credit, saying that, okay, give me in 30 days your money, like our ration shop, right? We go there, take the material, we are not carrying cash or carrying our mobile, he gives us a credit. That credit plus financial liability, along with other liability, which some industry has so many liability outstanding due from a small and micro enterprises, etc. also is mentioned. Yeah, if you do that together with temporary provisions, yeah, provisions like bad dates provision, etc. If those we add, we will get current liability, which is here is 4.5 thousand crores. Okay, so that number comes into current liability. I take a difference. Of course, I'm getting a negative working capital. You got my point. The moment I see a negative working capital, this number, Swetaji and Dr. Who asked me a question, is the answer to your query that this is the number we have to be worried about. Yeah, and you see current ratio, immediately the ratio between current asset, which is very low, less, versus current liability for Go Fast airline, indicates that this company is in huge trouble because it is below one number. So what's the standard? That above 1.2 to 2, if the ratio is 1.2 to 2, and next slide I will show you, is a sustainable number. Anything below creates a crunch on the head of finance team, and they have to manage this working capital in that case. And for a startup, it is directly goes to the head of promoters or the entrepreneurs who are working towards a success. Now I have taken another company just opposite to the previous company, which was struggling and went into bankruptcy. Even though it was a forced bankruptcy, they have taken their own self rather than lender dragging them to the bankruptcy code or NCLT. Another company I have taken from biotechnology industry is Biocon, another lady-run company which is right now touching to the success. Yeah, which is not possible for very first time businessmen. So this company, what I again have done is I have gone to their balance sheet and took their total March 22 year ending number under current asset total, which is here is in terms of course, we are talking about in dollar, rupees million. So this is approximately 8,000 crores, yeah, or 83 million is the number. So 8,000 crore is basically is their current asset. While when I went and look into their current liability, which is the bottom of the balance sheet, which includes borrowing, other financial liability, even the income tax liability, which you have to pay because the year ending March 22, and provisions of current liability, which you need to fulfill, which can be your, short-term debts of different kind, is only 3.8 thousand crores, which is 3,828 crores. You see, I brought these two numbers into my calculation and I saw the working capital number is positive. Also, the current ratio is you see has jumped to nearly 2. Now, this is the best situation of working capital. If you are able to see this, you should be comfortable that my finance team and my business is doing really good. The blood is at the top of its pH, definitely above 7, category. You need not to be worried, or 14 category. You need not to be worried. So now let's talk about what Meenakshi Sundaramji asked me. What are those numbers? So I have just given you the scenario. If current liability is greater than current asset, which means current ratio is less than 1, which was the case of Go Air, company cannot meet its STL. STL is full form is short-term liability. You cannot meet your short-term liability and you will definitely face a problem. So even though they were in, IPO bound, they had such kind of numbers, and that is based on the industry to industry. Yeah. And now we see in the hindsight that number should have indicated a lot of investor that don't invest in their IPO. In hindsight, at least we can make sense of it. But by the way, that industry has such kind of lesser than 1 scenarios. Most of the company are in that scenario because of the wet and dry lease of the airline, which is a heavy number for any airline. Okay, so that's why I said based on industry to industry, this changes. Second scenario in the same case where current asset, because positive number, yeah, where the current ratio is definitely 1, which means simply that the company can meet its short-term liability easily if it is more than 1, current ratio more than 1, or current asset. So what are the standards? Industry standards. Industry standard is overall 1.2 to 2 could be working capital requirement, which is the case of Biocon. However, again, greater than 3 current ratio indicates that that company is, holding money or holding cash or holding inventory, which is where the funds are locked, and that also definitely indicate it is an inefficient capital utilization. Again, these are research-based numbers done by a lot of PhD scholars. We are just using as a thumb rule, and it helps us. Now, let's go in next 15-20 minutes, whatever I can cover, or maybe little extended hours if allowed by our next speaker, Dr. Sateesh, I think, and Gauravji, I may complete other parts as well. So working capital management is, nature of this working capital management is dynamic. Please understand, you cannot create one thumb rule and follow it throughout your journey. It changes based on where you stand your business. And that is why I say it's a blood. Yeah, when you are running, you need your blood to flow faster. Otherwise, it will fail your heart. If there is a viscous blood with you, that creates a lot of trouble. Or there is a fat in your blood, that creates a lot of trouble. So when you are running, when a company is in full-fledged operation, it makes sure that the system catches up with them. That means you have larger working capital. In terms of trader, yeah, they want money to buy next big stock when the prices are low, and they will sell when the prices go high. Best case is tomato. Yeah, tomato ghar mein aap nahi la sakte ho because it is 180 rupees today, and some smart person has played that game. And I know few of them based out of Karnataka, Kolar, who has made within 5 to 10 days from 4 lakh of generally they make 4 lakh rupees in a month. They made only in 5 days 4 crore rupees because of this working capital management cycle. They had a capital, they hoarded tomato, and they became millionaire in one shot, at least half of the $1 million. So it is doable, okay, that you can manage your working capital. But please understand, as I told you, that 1.2 to 2 current ratio is good, but the current ratio exceeds 3, you are again in red zone. So there is no fixed formula, right? So ati sarvart varjate, we say in Sanskrit, which means extra enough or extra too much is always hanikarak or always bad for your health. And thereby, this is a double-edged sword. You cannot afford to be caught between a devil and deep blue sea of being undercapitalized or overcapitalized. That's the statement I regularly use with my investor, and it's part of my book called Underdog to Unicorn, a masterclass in investment banking, of course. The working capital management, which is a nature of, so as we have agreed, the nature is definitely a dynamic nature. You can manage this by 3 ways, which is available for studies. I'm not going to go into detail and bore you with the literatures. You have those literature with you. What I'm trying to illustrate to you here is how it affects a company operation. So a practical approach, basically. So we have 3 methods. So I can be a Baniya, and Baniyas are well respected in market for managing their working capital. Yeah, they will never pay you salary on time, but they will definitely make you, they will definitely give you a Mercedes on your bonus time. Go to Surat, and there are diamond merchants are doing exactly the same. Of course, they are paying the salary on time too. Yeah, but they are conservative. They are using conservative approach, which means that the number which they keep with them as a cash is enormously high than their fixed asset level even. Yeah, to manage their surge in demand. So the industry which are in that kind of area, who are working in healthcare, who are working in, where the sudden demand for their services increases, they have to have capacity to manage it. They follow conservative approach. Does this make sense? Where you have like seasonal businesses, yeah, of tomato or Holi ka business, Diwali ka business in India. All those businesses, whoever playing those category, they follow a conservative approach where they maintain much higher level of cash with them or current asset with them than it is required. Yeah, so you see this graph shows exactly that same, that level of current asset remains higher on the conservative approach. While in the aggressive approach, it exactly works opposite in working capital management and in real sense as well. Aggressive here means that you are not maintaining any cash with you. You are always working with the creditor or the supplier's credit, or through different means, even the bank credit. You maintain a very small threshold. You do not pay, you do not like to pay bankers or anybody else any interest on your short-term capital. That's the reason. So those kind of industry which have established businesses, yeah, mostly they afford to do this, where they are not maintaining a lot of cash or a lot of credit suppliers, either of these two. So current asset means both, credit, and they are getting payment in cash. If you are getting payment in cash, like retail operator, they also maintain a aggressive policy. While the hedging policy or matching policy, we say, is also called as average policy, maintains in between these two. These are the players who are smart and who are dynamic in nature, have time and resource to play with the working capital efficiently and effectively, or the bandwidth. Yeah. So our Agrawal brothers, who has a bandwidth to manage it without even focusing on it, uses hedging and matching approach. I'm just using some nomenclature which are available in market. I'm not doing anything injustice or anything. So don't claim on me tomorrow with all this caveat. Now, so what are the difference? These are the theoretical difference, and practically also exactly it happens in the same way. So what I have done, I try to put a table behind this approach to make it more simpler. However, when you want to research or your team want to research and explain to your EDP program cohorts, basically you need to go and go in detail of each of the strategy. But if you want to do on the thumb rule basis, or the we say worksman basis, or a CFO level basis, this is enough. Which means in conservative approach, the aim is simple, that you want sufficient liquidity. So when the demand surge happens, I have to have cash to catch that bird. Secondly, that means that what could be the impact? It reduces my profitability because I'm maintaining heavy cash with me. But it lowers the risk of short-term liquidity. That's what it happens. So the risk reduces, profitability also reduces in this case. Yeah. So few people do that. So cost of management is, of course, here is high. Cash flow impact is definitely positive. You will have a positive cash flow all the time, which means your company will be valued very high. Yeah. So valuation game, whoever are playing, those guys also need a smart conservative approach. Profit will be lower, but your cash flow will be higher, and then the valuation will be higher. That's the fundamental of investment banking. And the risk is, of course, low. And go to the opposite side, which is aggressive. You maximize your profit. The person who is always looking into their income statement, they follow this approach. In finance term, I'm saying income approach means you increase the potential profit of the company while you are also increasing the risk of the company, getting exposed to liquidity crunches. Yeah, so sometimes you will not have money to even buy your inventory. You can be stuck in that situation. So the cost of management, of course, low. So the CFO collar rises like mine if I follow this approach, but cash flow impact will be negative, and eventually an investment banker, which is again me, will not suggest this. Moderate approach is a neutral kind of stuff. So this is the management part, yeah, which Meenakshi Sundaram is teaching to their student. But what about assessment part, which generally a bankers does, or an owner who tries to approach to bankers or any other institution to get this short-term liability scheme or short-term liability from a bank? How they will come to know what are the way they will arrive to a value which is essential to us. I am going to exceed my time. So Sushil ji, I think Sushil is the next speaker. Gaurav ji. Hello. Am I audible, Gaurav ji?
Carry on, sir. Carry on. I am Sushil here.
Thank you, sir, for allowing me to continue. Namaste. Sushil ji, I know very recently. So thank you, Sushil ji, for helping me there.
Thank you.
Okay, so let me continue because this is a critical part, and without this, people will not be able to justify their application or their demand for working capital. So there are 5 ways which are used in India, across world even, but one way which is specific to India is maximum permissible bank finance, MPBF, where RBI has done quite a research. There was a committee who has suggested this, yeah, for the Indian businesses. So Sweta ma'am's question can be answered here, as well as Priyank's question. So the Reserve Bank of India has established its own guideline based on the recommendation of Nair committee. Yeah, they're recognizing that working capital is critical, and most of the businesses, as Meenakshi Sundaramji is saying, that they fail in 5 years. Nair committee has suggested a way to let them sustain for another 1 year. Yeah, which is a critical significance in the today's finance world, at least in India. So all CFO definitely are learned about these theories. Yeah, so it's no longer a theory, it's a practical approach. So 5 approaches. First is MPBF, maximum permissible bank finance, which is available on the working capital or for the short-term financing. That's the approach number 1. Second approach is operating cycle method. Third approach is drawing power method. Fourth approach is turnover method. And finally, we will end up with cash budget method. Let's delve into the most critical and most sophisticated method first itself. So you will understand it's not a rocket science. Yeah. Let's go step by step. We have seen current asset in one of the balance sheet of GoAir, as well as in one bad balance sheet of GoAir, as well as in one good balance sheet of Biocon. So those current asset, you need to deduct with the investment cycle, which is what is investment or inventory cycle is. Inventory cycle in current asset comes out to be your raw material, your work in progress, the material which goes into your machine to get processed, and finally the finished good. If you deduct this from the current asset and you add account receivable, means the payment which is due from your buyer, if we do the calculation of these two are current asset, right? So current asset equal to inventory plus account receivable. That's the simple calculation of current asset, which MPBF assumes. While the current liability we have already seen is also simple, the creditors wants money from you immediately within 1 year, and the bank borrowings also, which is due in 1 year. If you add these two, are your current liability, and this is what you use in the calculating your MBBF, maximum permissible limit, which bank can give to any business. So if you are approaching a bank and you have done your calculation right, they will not decline your loan application. That's the advantage. That's why you need to teach this method to them. And how they calculate it. So once current asset and current liability is clear to you, they calculate is other current liability, saying that other current liability is liability which are the difference between current liability, which is basically creditors, etc., minus the bank borrowing. If you do that, that is the other current liability. Again, simple equation. Put this two equation, the current asset minus OCL, you have the working capital gap. This is the assumption by the government. Okay, this is what RBI has done. They assume that current asset, all the current asset, which is inventory plus account receivable, the money which is your customer has not paid to you. If you take that, deduct the OCL, which is of course in turn is a difference between current liability minus bank borrowing. So remove that bank borrowing part from the current liability. That's what it is doing. If you do the gap between these two, that is what bank borrowing should be, right? For purpose of that. So that is what they have understood here. And that's the method number one. Again, it has two methods. One is liberal and another is stringent. In stringent, they go more conservative. So bankers approaches with more conservativeness in the stringent method. In liberal method, they assume that the owner or the entrepreneur, promoter of the company is prudent enough, and that's why they do not harshly come onto them. How that works? So in MPBF method 1, if you see, you take the working capital gap, which came if you remove the bank borrowing from this equation of working capital. They deduct a margin, saying that, look, owner also take a responsibility of this working capital. Again, it's a banking fundamental. We will not go into that fundamental. Itself is a subject which is taught in Bankers Institute, not in Galgodia Institute faculty development program. However, the margin, let's assume it's generally in Indian context is 25% of the working capital. So the total working capital gap requirement, 25% owners should bear, and that's why that get reduces and banks create some margin for you or cash credit for you in the bank. Are you with me up to here? Or overdraft facility for you in the bank. So you approach yourself with the bank with this calculation and you are done. So MBBF, the maximum permissible bank finance would be 75% of this gap, working capital gap. Any doubt here, team members? Because I do not want to move further if you have not understood this. And I think I am trying to explain at layman language. Of course, if my banker fraternity people or Sushil ji who is watching me, he must be laughing. However, this is the only method available. Nobody can make it simpler than this, for sure. I'm not challenging, of course somebody can, but I'm just trying to make it more reasonable for you. Second, in the stringent method, they go further aggressive. What they do, they take a margin at 25% of current asset. Current asset will be larger number, right? Rather than deducting the bank borrowing. So they include the bank borrowing, they take the full number of inventory and account receivable, and then they say 25% of that should be borne by the promoter of the company. And that's why the margin number here will be higher. So simple word, liberal method will be little large money available for you in the bank, and in the stringent method, bank will reduce that number furthermore. That's it. So margin money can be arranged through the long-term fund, which is equity of the owner, or long-term borrowing. They can say that please take from the long-term borrowing side. Second method is most interesting and most applicable. Most of the businesses follow. So here I will take additional 1 minute extra from you and explain to you. So where I want to explain to you a business cycle itself. You see, any business, if you want to start, that starts its operation from purchase of raw material. How many of you agree with this? Or anybody, any professor has a different idea, please raise hand. So at least I know, or comment or open your mic and tell me if you think anything other is possible. So that will be good learning for me even. And I believe learning happens both way, never one way. So please guide me if I am wrong here. But 99% of the business operation starts with purchase. And if you agree with me, please raise your hand or give me a thumbs up. So I get motivated to tell you the full story. Let me watch as well that what people are saying. Okay, so a lot of people are saying that. Oh, no, I didn't get thumbs up from you. Okay, so Dr. B. Meenakshi Sundaram says yes. That's the way any business starts with this particular process, which is a purchase. Yeah. So let me go back to the presentation mode. So purchase end up is purchasing a raw material. So you need to have some cash or credit from supplier to purchase the raw material. And that's why I said regionally it differs in India. So some places people are very open to give you credit. Start your business, brother, I am with you, kind of friendship. Yeah. And some places people are really stingy. They will say, forget about your business. You give me money to run my business. I will not let you buy anything free. Second, production and manufacturing processes. So second step where you need your money is this raw material goes inside a manufacturing process where the machines start running and rolling. In service industry, manpower starts utilizing your processes. In technology company where the algorithms start working behind the wall, where servers are getting heated. So all that is manufacturing process. I'm just combining it. So those raw material, intellectual property rights, or the query by any customer, or a requirement goes inside the manufacturing. And there is a time required to that. Now that manufacturing process you start, and then that process takes its own time. In software industry, in chat GPT industry, it's in milliseconds. And in manufacturing, it is month on month. It is a nuclear power, again, months on month. So it depends on industry to industry, but you have certain aspect of work in progress. That work in progress, again, requires packaging in stores, where you put before it goes to the consumer, you need to pack it properly. You put it in a store before it gets sold. Again, there is a time lapse there. Then the finished good is ready, which Amazon or any person's warehouse can utilize and sell it. After person receives the finished good, and there is a huge debate at this part. Please understand, most of the accountant, auditor, company suffer in this process. Yeah. And if they don't manage this process, they become Baijus. So they can report very high number of sales, and later on they will fight with Deloitte. Again, caveat there, this is a point of contention. I don't know what has happened, but this is what is in media. So sale and invoicing happens after the finished good. Customer buy your product and you go, he becomes your customer as well as account receiver debtor. Yeah, so either of these terminology we use in terms of business, and that data does not pay you immediately. It takes 1 day, 2 day. Of course, if you are doing through UPI, it happens in seconds, but it also takes 90 days in certain kind of businesses, and maybe years and years if it is a government. Then comes the account. By the way, government version is 45 days. So I take my word back. They pay in 45 days. People do not receive money in 45 days. Yeah, that's the regulation. Once the account receivable converts into cash, again, you have a cash either lies in your balance sheet on that particular date when you report, or you send it for the purchases. That's the normal business. Now I will let you sync on this. I have to attend a small call in 5 seconds. I will be revert back. That's a problem of being in industry. Some clients are so important that if you will not lift their call, they will keep calling you, even though they will know that you are stuck. Okay, so let's go back again. Is my screen visible? Gaurav, please confirm. And I will take another
Yes, sir. Yes.
10 minutes if you allow me, and I will complete it, or I will rush it, whichever way you want. So now each of this process require a time, and in business term, time is money, and that's what the operating cycle covers. Operating cycle covers through time your money approach. Okay, so it's a very interesting approach. Everybody knows it, but I'm just trying to illustrate you step by step so your cohort understands it better. So for example, you put a purchase order, you receive your raw material within 30 days. If you are importing, it takes more days. Yeah, but I'm just assuming from other state to this state. Chandan ki lakri I am importing from Karnataka to Mumbai. It requires 30 days, and my business is incense making business. Okay, then that Chandan ka lakri I convert into incense stick. That requires 15 days to convert totally. Yeah, so first dry it, then put into different processes, wash it, clean it, make it spiritual, put some jadoo tona and make it more usable. That becomes your incense stick. That requires 15 days. You put for packaging or in your store till the time it get bought requires additional 15 days. Yeah, I'm just giving you a number. It changes again based on industry to industry. It depends. Then that incense is bought by the wholesaler or the large distributor or Amazon warehouse. They say, give me 30 days to get this money back to you. So you give me the stock in my warehouse now, or in my company, or in my house, I'll pay you in 30 days. So that becomes your debtor days or account receivable days. So 30 days you require there. You see, we have already crossed 90 days till since you have put your money into the business. You are saying, and there is no money yet in your bank account. So 90 days is a critical days, and when we will convert into your annual numbers, you will understand it's a heavy amount which you need to have in your bank account. So even though now 30 days into debtor, I have already sold officially, and that is my current asset, not the liability side, where I have taken a cash credit of 30 days, still it disturbs my operation. Okay, so the moment I enter the raw material, enter my production plant, from there onwards, you have an asset. Till the time it has reached there, you have a liability. Are you with me? So the next cycle is sundry credit days, where the creditor has taken. So the process has taken 30 days to achieve to creditor. And now creditor says that, okay, I have agreed to your payment. In 30 days, you will receive in your cash account. This process, if you see, is approximately, we are talking 30, 60, 90, and 120 days. That's one operation cycle for one company. Yeah, here in case in point is incense company. Now, which means what it means? Generally, we assume not 365, 360 days and divide, or 300 days operating days. Operating cycle you have is 3 times. 120 into 3 goes to 360. So in a year, basically you are rotating your money 3 times. That's the assumption here. And that's what the operation cycle means. However, your working capital is still remains only 60 days. Why is that? Because your cash cycle involves 60 days and your operation cycle is only 60 days out of this, because we will take the creditor minus the asset or debtor. And if you do this number, you see 60 day is the day which your operating cycle actually needs it. So how I calculate that? I calculate that by taking the raw material RM, WIP, spelling mistake is there, it is RW. So just understand it's RM plus WIP plus finished good days and then AR days. Minus AP is my real cycle days. So which is approximately whatever, in this case, it will be 90 days. How many cycles we are saying? So number of operating cycle is 360 days divided by one operating cycle, which is in case of 60 or 90 days. Now assume that company has 300 millions of annual turnover last year. Okay, so how I will come to know what is his operating cycle? I will take the operational expenses, which is approximately $240 million out of 300 million sales. I take a ratio of that between the operating cycle and operating expenses. That's the working capital requirement. So it's another approach to reach to a number through days. So annual operation is 240 divided by 3 in our case. For example, I'm just saying 240 divided by 3 is 80 days is my working capital requirement in days term, and multiply that with 300 days or 300 million or 240 million, I will get my working capital requirement, which is 240 divided by 3 is approximately 80 million is the number. 80 million is the number, not 80 days. Now that's operating cycle method. There is another method called drawing power method, where banks sanction a limit. Yeah, so they can create a credit limit, which can be very higher amount, but then they will put a drawing power limit that you cannot take more than this amount. And they do it by this simple calculation, where drawing power is the amount that customer can withdraw every month. So you have a 90-day cycle, which is 3-month cycle, but they will say every month I'm giving you lesser amount to take. And how they calculate? You can take the operating cycle method as well, or you can take a simple calculation that you remember in the previous slide we calculated this number, which is operating cycle. Same number they use here up to here, operating cycle, minus they do is a margin. They will say that this margin I'm not allowing you to take, otherwise your company will be exposed to larger number. So bank plays this role. Plus they add a book debts less than 90 days because that is due. And again, they will deduct the margin, and they add these two numbers and say that's your drawing power every month. Clear? So that's another way to reach to working capital requirement, or every quarter based on the working quarter requirement. Second last method is turnover method. Again, very simple. You see here what they do. They take the working capital from the sales. Yeah, so they take the working capital from a sales number, and then bank will give 80% of that, which is sales number. They say sales ka 25% means 4-time operating cycle. They are saying 25 is your working capital. So say $300 million is your sales. They will take 25% of that first. Okay, assuming that is your working capital requirement, and 80% of that bank will be giving you. While the margin in this case remains is 20% of, again, 25% of the working capital. Again, simple calculation. In the rush of time, I cannot go in much detail here. Otherwise, I could have explained. Now, here there is a thumb rule. You remember I told you there is a thumb rule. Yeah, this is the thumb rule for SSI units, small scale industrial units. Industrial units means manufacturing unit mostly. They say working capital requirement in turnover method should not exceed 5 crore in any circumstance. That's the assumption by the government or by the industry experts. And for others, they say 1 crore. So that this is the limit they impose on any other method which is possible, specifically on the turnover method. Are you with me? So here we are answering another query. With this, I am ending my session, but this session I believe is a dynamic session. You can keep asking questions whenever you are confused with anything which you are going to read, and I will be happy to help from a practical background, and happy to help even associating with you guys on any research which you are planning to do in this segment. And we have enough data of the industry. So thank you very much for being a patient listener. And I see the strength is more 200 today.
Sir, hello, sir. Would you please share this slides now with us?
Absolutely, sir. It will be available with you, and it is now on video record, so that you can access through different sources. And this lecture is also available on YouTube, which we have conducted with Calcutta University last month.
Thank you so much, sir.
Pleasure is mine.
Sir, dear participant, if you have any query related to working capital assessment, what sir has presented, so you can discuss with our speaker. You can unmute yourself.
Yes, sir. Hello, sir.
Yes, please tell me your name and your college, so it will be better to recognize
Sir,
you.
I am Vichan Singh Sulia from Maharashtra.
Correct, Vichanji Suryaji.
MBA department, Sri Sant Gajanan Maharaj College of Engineering, Segaon.
Yes,
My
sir.
question is,
Last time I didn't answer your query, so you can ask the question of last time as well. Please go ahead, Vichanji.
yeah, my question is, sir, what should be the part of need analysis in this working capital?
Can you repeat your question? What will be the part of need analysis? Need analysis is the working assessment which I described.
Yeah. So how we can proceed need analysis and this working capital? How
you want
we
me
can?
to tell you the steps? You want me to tell you the steps? How you should approach that? Do you want me to tell you the steps, Vaichangji, Suliaji? That how you should approach to evaluate need analysis? Okay, I think that's what you
getting. I'm not getting your points.
Okay, so I'm trying to re-summarize your point, saying that you are asking me that how to go about need analysis, isn't it?
Yes, sir. Yes.
Okay. Right. So basically, how to go about it, Suliaji, is that you first start up with your balance sheet. To take balance sheet or your accounts, yeah, and first calculate is the current asset and current liability. These two numbers you have to locate in your balance sheet. If you are an analyst, you will locate in the balance sheet like us. If you are a entrepreneur, you will go to your accounts department, tell them, give me current asset and current liability. And if you are teaching students, you can do the same thing. First step. Second step, you need to select a method which I just listed for you. There are 5 methods, right? There are cash method. There are, let me stop the screen. There are, turnover method, operating cycle method, several methods are available. Out of 5, you have to select one based on your industry. Basically, you have to be careful about your industry and where you are going to ask this money from. These 2 criteria also you need to know. That, okay, sir, I have decided I want money from outsider bank, or I have decided I want money from government institution, corporate guarantee scheme like SIDBI, NABARD, those institutions. Once you decided that part and plus which method, then you select and you conclude your method. Once you have concluded your method, then of course you go and do the calculation which I listed on the slide. I will definitely share the slide with Gauravji. He can distribute to all. And then once you have that number, you take the third step, you take your finance team along with you and go and thrash the bank door or the institution door which you want money credit limit to be created. Clear? This is just simple. Other methods, other points are also involved, like whether you want to do cash credit, overdraft, which method is efficient with you, but that's the responsibility of CFO. So call me and I will help you there. And that to be free because you're a professor.
Yes. Thank you, sir.
Pleasure. And you had a last time also a query, Vichangji Suliaji. Unfortunately,
sir,
I could not.
That query is remaining, sir.
Please ask, and I will be able to answer now if, of course, our other speaker.
I will locate in my diary and then ask. Sir.
Please go ahead. If anybody else has any query, please go ahead.
Yeah. May I?
Please.
Hello.
Who is this? Please take your name. Meena.
Yeah,
Hello,
myself.
sir, audible?
One by one. Let Meena ji ask, ladies first, and then we will take that. Even though you came first, sir.
Thank you, sir. So, sir, I'm an optometrist and I'm trying to open my own optometry clinic. So, which method do you suggest me to follow for my working capital assessment, sir?
So, Meena ji, I think you are joining with the name of Meena, and your name is Shruti, I believe, or Sithur ji, correct?
No, my name is Shruti Meenakshi, sir, actually.
Okay, good. So at least I am able to know your name from previous lecture. Thank you very much for right question to ask. This is a very practical and industry-based question. Optometric is an industry which is right now is doing very well because of the lens card and all this online player come into play. If you are playing your cards right. See, so you have, why I'm saying that, because working capital you can manage through these kind of people as well. Yeah, who will put their goods at your store and sell it, which means that that credit headache goes to them. Point number one. So you need to manage less working capital. Point number two, they are also managing the sales cycle for you. I don't know what is your exact situation. That's why I'm saying it answer will depend on based on your specific situation. But these are the thumb rules I'm telling you based on your industry. Right now, people are leveraging that. What they will do, they will open a shop, but they will keep 1 or 2 salesmen who will be attached to this lens card people or Sparks. There are several, lens manufacturing company who helps you on this aspect. So you can reduce. And in e-commerce, exactly Amazon and Flipkart is doing that for you. So coming back to your basic question that what should be your working capital management theory, I believe at this point in time you can go ahead because you are starting, be a little bit on hedging side. Anyway, that is an ideal situation where you don't keep too much cash with you and neither you will have so much cash. But what you can do, you can borrow it from your long-term capital under short-term capital. So you tell your equity money supplier or a banker to create a line for you in overdraft. That will help you to immediately kickstart your being optimist, optician journey. You're a doctor, Shruti ji?
No, sir. No, I'm an optometrist. There is a separate course called optometry.
Of course, I
I've
understand.
done.
Yeah, fine. So that is measuring the eyesight, etc. Wonderful.
Yes, yes, yes.
So that is why I said for you, these kind of people will help. So you can help, give them a space, and they will be able to manage your working capital. But you can choose any method. Does that make sense to you, Shruti ji? The method which I told, does that make sense to you, Shruti ji?
Or maybe like I am looking at different setups. Like initially, I was associated with the institute as assistant professor in a technical field for some time. Then I was a clinician. Right now, I'm venturing into the independent practice. So I have not started. I'm just sitting and doing all the research work, backwards, which I need to do. So, and when I came, I did not have any knowledge on this accounting and management part of it. So I wanted to do this. And recently, we had this optometry field and few other fields have been converted to independent healthcare from allied health professions. So there's a little change in the bill and it has been passed recently. So I need to work a lot from what others do. And now little after this change, we have got little bit more freedom to practice our specializations also. So since I'm working, I'm finding out no help from people to work on all things. Maybe I think with this I'll be able to do. Maybe I should also contact some accountants to take help from accountants. That will help me further also.
Absolutely, absolutely. Who are expert, it is better to approach them. Yeah, and I am also available at your disposal. Just send a message and we will try to guide. Thank you very much, and best of luck to your journey. You are one of the right person to be here in this lectures. You will gain a lot. Anybody else? Yes, sir. Sir, who was trying to ask a question. Let me take that, and then Gauravji, you can take over if you wish to.
Sir, question. Yeah, participant, I am requesting that you should send your question. I will forward to Vivek sir, definitely. And we have also our lecture of Vivek sir. So please be ready to ask your query on third session of Vivek sir, because our next speaker is waiting from
long time. Yes, I know.
Time. So thank you, sir.
Thanks very much.
Yes, sir. So, sir, kindly accept yes. So, sir, I have prepared for you. So kindly accept the guest of honor from the Galgotia University.
Thank you very much.
And sorry, sir, due to the time limitation. Tomorrow surely we will discuss more. And yes, sir. Thank you so much, sir.
Thank you.
Thank you, sir.
Thank you, Vivek sir.
Thank you and welcome, Susil ji.
I kept listening every second.
I am also going to listen to you, and thank you very much for listening. Appreciate it.
Right. Thank you, sir. Thank you.
Thank you. Thank you so much, sir. Okay, so moving ahead, our next speaker has joined with us, Mr. Susil Kumar Sharma, sir. I'm requesting all the participants kindly mute yourself. So, Mr. Susil Kumar Sharma, sir, is a former general manager at NTPC Limited. He is also the founder and CEO of Sustainaco. He has served as a trainee scientist at Bhabha Atomic Research Center. He is a sustainability leader with nearing 40 years of experience in the area of climate change, ecosystem management, ESG, LCA, sustainable supply chain, biodiversity, circular economy, net zero, energy scenarios, energy management, energy transition, renewable energy, corporate governance, as well as stakeholder management, CSR, and business excellence. He has delivered several keynote talks on ecosystem restoration to Swarnim Startup and Innovation University, Gandhinagar, Teri, Sasnagar, New Delhi, and Kirorimal College, Delhi University, Government Engineering College, Jabalpur, Madhya Pradesh, Netaji Subhash Chandra University of Technology, New Delhi, IIT Kanpur, IIT Bombay, IIT Gandhinagar, and many more NIT and IIT, IIM also. So we are very privileged and grateful to have as a keynote speaker, Mr. Susil Kumar Sharma, sir. So, sir, kindly deliver that, accept the invitation and deliver that keynote talk, sir. Thank you. Thank you so much.
Sure. Thank you, Dr. Gaurav. My screen is visual?
Yes, sir. Your screen is visible.
Visual. And is full screen?
And no, sir. Actually, your PPT is not visible. Your screen is yes. Now PPT is visible, sir.
Now PPT is visible and is visible full screen. All right. Hello,
yes, sir.
Dr. Gaurav?
Yes, sir. Yes, sir. Yes, sir.
And my voice is also loud and clear.
Yes, sir. Yes, sir.
Perfectly. So
Perfect,
thank you, everyone. I am grateful to Galgotia University, Greater Noida, a beautiful campus, latest, I can say, a decade-old infrastructure, and nicely maintained. Anyone visiting Galgotia University campus will feel a privilege of. Now, coming to today's topic, ESG. It's quite latest terminology being used by all the stakeholders globally. I am fortunate to have a lecture following Vivek Suman sir, because he was talking finance, and this being the second lecture, I have seen the schedule, and tomorrow will be the third. Now, let me say that whatsoever I am today, it is nothing else other than by NTPC, in NTPC. When I joined this organization was in its nascent stage, just coming up. And today this organization is 48 years and have written unparalleled success story globally. This organization, though operates in one of the dirtiest segment of economy, that's the power generation, predominantly using fossil fuels. Fossil fuels are coal, fuel oil, natural gas, and all varieties of petroleum-based products. You see the second in between shot, which speaks the financial strength of NTPC, which is in power sector unparalleled globally. And how it happens, why it happens, the inspiration comes from the team itself, team NTPC. On right part, we see a great man who in fact laid the foundation of NTPC, and he was the first chairman appointed by Government of India during emergency time of our country in 1975. I am talking about Dr. D.V. Kapoor, no one else, who is just completing his 100 years. And even after when I joined NTPC in 1983, Dr. Kapoor superannuated 2 years before than that. That's 1981. So after 42 years of his superannuation, he takes keen interest. He keeps motivating Team NTPC. He keeps communicating his feelings and advices from time to time. And what see here is a letter written by him on 2nd April 2023 to our present chairman, Sri Gurdeep Singh Ji, communicating his feelings on NTPC's contributions and achievements. NTPC received the prestigious Business World People HR Excellence Award for the year 2023. NTPC recognized as the most preferred workplace. You see, the most preferred workplace in power sector. 2023-24 in the prestigious 3rd edition of the Most Preferred Workplace Awards. NTPC recognized as sustainable organization at the Economic Times Sustainable Organizations Award 2022 held recently. And NTPC's Baroni Station ranked first and received National Award for water conservation, using water most efficiently. With this background of my backbone organization NTPC, let us look into quickly in today's topic. We will look into the 3 pillars of ESG. ESG history, or I will say background, begins with climate change, ecosystems deterioration, and the burning issue sustainability. Now we will look into briefly about ESG framework. Then we will go for looking deep about the performing organizations on ESG scale. We will look into ESG ratings of Indian organizations. And finally, we will look into that ESG offers opportunities in abundance to young minds and young professionals within country and beyond. Rightly said by Vivek sir, and I will add up to that one further. Nothing happens without money. It's a fact. But how money is used and what happened and happening with money, let's look into. So I will be taking you on a journey through real life scenarios which every one of us, wherever we are, experiences personally from time to time. And this way, probably I will be in a position to communicate the essence of ESG. Now, any organization is judged through SWOT analysis. My purpose of showing this window is not to look into what it contains, but is a measure which was being used since time immemorial for assessing the health of individuals, organizations, nations, and in wider sense, everything. Now, together, everyone achieves excellence, and the need of time is we must team up. That's what is desired in today's time. Now, ESG framework, the 3 pillars, you look into deep details later on, but to begin with, the 3 pillars are environmental pillar. It is not limited to environment management. It is much deeper, wider than environment management. The second one is social pillar, and third one is governance. We all know nothing happens without effective governance, whether it is an organization, a country, or even globally, whatsoever we focus at. Now, a bit brief about the 3 pillars. The first one, environmental pillar, it is focusing on renewable fuels, greenhouse gases emissions intensity and quantity, energy efficiency and energy management, climate risks, water management, recycling processes, emergency preparedness. And mind it, these are only the tips of environmental iceberg, I will say. Likewise, social. It focuses on health and safety, working conditions, employee benefits, diversity and inclusion, human health, impact on local communities. The governance pillar focuses on ethical standards, board diversity and governance, stakeholder engagement, stakeholder rights, and pay for performance, not only for presence, number of hours, but for the value addition, what individuals, different hierarchies, and organization as a whole does. Going further, ESG organizations are now categorized, whether organization want or not. This categorization is being carried out by global and Indian organizations. Even in many cases, the organizations which are being rated and ranked are not aware of. This is basically the categorization scale, which ranges from AAA to CCC. AAA are the, I will say, best performers, or you can say the leading organizations on ESG, followed by AA and continue up to the CCC. CCC are organizations which are sleeping. They are not aware. They are not prepared for change management, and probably they are going to face the situation what was faced by Motorola, Nokia, Kodak, and so many. Even Suman sir, he mentioned about Go Air. Even before then, Go Air, Sahara Airlines, the Kingfisher, and so many. So let us go ahead what really it means and it is. So AAA and AA, these organizations are not a fixed number, but for the essence of Indian organizations study, only 24% of companies received a rating of AAA or AA, and they are termed as leaders. Who are they? Leaders are proactively managing ESG risks and taking advantage of ESG opportunities better than their competitors or peers. Likewise, average, that is BBB and A, they may be managing some key risk issues well and others poorly, or they may be average across the overall risks they are facing. Likewise, laggards are sleeping organizations. They have relatively more unmanaged exposure to ESG risk factors. One of the most widely referenced ESG rating system is the MSCI ESG score, which we have just seen the details. Morgan Stanley. Now, the ESG iceberg, the tips, the three pillars, and few elements within three pillars we have seen. The iceberg is a favorite metaphor for conveying sustainability reporting or ESG reporting. Symbolically, the tip of the iceberg shows what stakeholders, directors, and investors want to see in ESG reports. Now, Government of India have made stock exchange listed top 1000 organizations to file their ESG report, which is with nomenclature in India BRSR, Business Responsibility and Sustainability Reporting, beginning from financial year 2022-23. That means the concluded financial year in March 23. These reports will all be available on public platforms openly. And then we can look into, we can analyze ourselves, and we can in fact use them in taking the decisions even relating to mobilization of financial resources. In fact, globally, ESG reports are now being used for taking decisions by investors where to invest or not to invest, how much to invest, how long to invest. So ESG has become, as we have seen the three pillars, a comprehensive indicator, not only limited to finance or to HR or to sustainable supply chain or to operations or to maintenance. No, it's very comprehensive. That's why it is being used, it is being preferred. Going further, below the surface are numerous issues. What are they? Just for indication, data completeness, whether the data presented in the reports are complete or not, whether they are correct or not. So data anomalies, calculation methodologies, standards and compliances, extrapolations and intrapolations, etc. So these are within the water surface if we refer to the ESG iceberg. Every company has few persons or a team who understand not only everything that is visible above the water line, but also the underlying data right down to its deepest point. The humpback whale represents such persons. Auditors like Big Four, KPMG, PwC, EY, Deloitte are the world as the scuba divers who deep dive the iceberg to ensure everything is in order down there. And that's why Government of India have also mandated the A-class organizations to get their sustainability report accredited as per international standard, so that these issues within the iceberg are taken care of and addressed systematically as per international standards and practices. Now, before going further, let us look into very important aspect. Why ESG? That's ecosystem. We all know ecosystem supports lives on Earth. We also know the healthier the ecosystems, the healthier the planet and its people. That's why during summertime, we find a lot of great young minds. They leave their working place and rush towards Jammu Kashmir, Himachal Pradesh, Uttarakhand. I mean to say the relatively cooler places. There has never been a more urgent need to revive damaged ecosystem than now. You may be thinking why I am referring damaged ecosystem. I will show you what really we did. The United Nations Decade on Ecosystem Restoration, which is the present decade, which began on 5th June 2021, aims to prevent, halt, and reverse the degradation of ecosystems on every continent and in oceans. That means globally. Ecosystem restoration helps to end poverty, combat climate change, and prevent mass extinctions. Extinctions is one of the serious concern, and more so not only extinctions of the living being on Earth, but more so in water bodies, including oceans. Restoration will only succeed if every one of us play a role positively. And let me mention here, Galgotia University is again one among front runners who have taken initiative to look into this topic and take it to the masses, so that contributions which are desirable at individual levels, they come positively, and this concept spreads among young minds to society. Nature is the greatest place to heal and recharge. We all know it. Now, I will be rushing through all the theory part, and let us look into practicals. So whenever we encounter such ecosystems, we ourselves feel elevated, energetic, motivated, and in fact, at times, if time allow, we attempt to extend our being in such environments. These are real life scenarios of our own motherland. How beautiful is, or I will say was, ecosystem in our country. Going further, we are bestowed with the cleanest river still in our country, that is Dauki River in Meghalaya. It is so clean that you can see the shadow of boat down below water about 10 meters deep. That's the cleanliness of naturally ecosystems. Going further, see the beautiful nature. This rainy season, post-rainy season, if we move many rural areas, we will encounter such natural scenarios which not only elevate our mood, but also inspires us. And the Lakshadweep entry point from Cochin, you see naturally how beautiful and attractive it is. Again, we are from a country wherein our ancestors been worshipping, maybe with awareness or without awareness, I can't say, but I will surely say with awareness. All matters are composed of 5 basic elements we all know, and they are called Panch Mahabhutaj in Sanskrit, which inhere the properties of earth, water, fire, wind, and space. And we will look into what really we have done to these Panchbhutaj within our country, and before than that, what global community have done. With this, India once again is leading by example global community. We will look into details why I made this statement. Now, United Nations have classified ecosystems into 8 categories. The farmlands, forests, freshwaters, grasslands, mountains, oceans, peatlands, and urban areas. Nothing is left about. If these 8 categories we are referring collectively together, that means we are talking about ecosystem in entirety. Now, sustainability. Sustainability is not just environmentalism, but much more than that. And what it is? What our father of nation says decades and decades ago. Meeting our own needs without compromising the ability of future generations to meet their respective needs at their times. We require natural, social, and economic resources for progress and prosperity. So it's a brief of sustainability. Now I am taking you on a transition journey which really happened through industrialization. And industrialization is in the background of ecosystem damage and the situation we are facing today, without any doubt. Let us look into it. So industrialization is quoted to begin in the year 1780, that is 242 years than today. The first 120 years was as industry 1.0, which was basically mechanization period using energy of water streams and steam power generated using coal. The industry 2 basically lasted for 70 years, 50 years less than industry 1, from 1900 to 1970. During this phase, mass production became a reality through assembly lines using mostly electricity generated from coal and water streams. The industry 3 is from 1970 to 2000, again 40 years less than industry 2, just of 30 years. During this period, computerization, automation, and robotics came into existence. The industry 4, which is continuing and transitioning from 4 to 5, industry 4 lasted for 20 years, from 2000 to 2020. And during this period, internet and network communication became quite handy and useful. Then data sourcing also came into practice. The industry 5, which is now transitioning from industry 4 to 5, is about distributed value chains, remote productions, cyber physical systems, and so many things. You can add up AI, machine language learning, and everything. Now, industrialization earlier used to be, in fact, a suspicion for reducing the manpower. That means manpower going away from industries, manpower rationalization. But Industry 5 is entirely different. It is focusing on producing new and different through a collaborative teamwork between machines and the men. That's why nowhere, because of this industrialization, modernization, retrenchment is happening. If it is happening on other counts. So Industry 4 was about more and more production without bothering what happens as effects and impacts of production. But Industry 5 is about new and different. Now, as I have mentioned that most of the energy comes from fossil fuels. Fossil fuels, when combustion takes place, they generate variety of gases, predominantly the CO2 gas. And greenhouse gases basket, if we refer, CO2 is the component which is more than 2/3. And this is the primarily responsible for increase in concentration of greenhouse gases in environment. As a result, if we just focus on CO2, it has reported more than 35% increase in concentration of CO2 gas in terms of parts per million, which increased from 317 to 422 during 1960 to 2023. So this increase in CO2 concentration is really causing havoc. And this increase is contributed by electricity and heat processes, agriculture, transportation, forestry, and manufacturing. Now, as on now, you yourself can Google and find out what is the CO2 concentration in atmosphere. So herein, figures are given, trend is given since 1958 till 2058. So the orange or red color, the last portion from now to 2058 will be or is predicted to be the trend of CO2. These are the countries who have contributed mostly in CO2 addition in the atmosphere, thereby leading to increase in CO2 concentrations. The China, United States, and we are third, India. There are other countries, but most have come from China. I will say during last 3 decades, United States used to contribute and was the leading country 2 decades before, but now China has taken over. We were in fact nowhere, but last 2 decades, lot of changes have taken in our country, and more so I will say 2014 onwards, the progress in India is exemplary. Now, per capita emission contributions, you see the leading countries are Saudi Arabia, predominantly the fossil fuel rich country, using fuels themselves most inefficiently, followed by USA, Russia, Iran, Japan, Germany, China, then becomes India. And if we talk in terms of per capita, we are much less than global averages. China is the world's largest CO2 emitter, who accounts only for 28% of the emissions, more than 1/4. This is followed by USA 15%, European Unions put together 10%, we ourselves, India is 7%, and Russia 5%. CO2 concentration in the atmosphere are more than 400 ppm. Precisely, I have referred latest figure as 422. The climate mitigation change, United Nations member parties have set a target in the Paris Agreement, which was signed in 2015. It was prepared 2015, especially November. Exercise continued. It was signed in April 2016. Of limiting average warming to 2 degrees centigrade above pre-industrial temperatures. But what is the status? The world is not on track to meet its agreed target of limiting warming to 2 degrees centigrade under the present policies globally. The expected warming will be in the range of 3.1 degree to 3.7 degree centigrade. So just think of it, if it goes in that range, what will happen. But before than that, let me show a bit more about greenhouse gases. These are the major 10 components in greenhouse gas baskets. Carbon dioxide is 79%, followed by methane 11%, nitrous oxide 7%, and remaining all other known and unknown components 3%. So these are again contributors. I have already referred earlier, but to remind, transportation contributes to 33%. That's why if we look into the dirtiest cities or places globally, there are many places from our own Bihar state where industrialization is almost non-existent, but there are many places. Our Suman sir, if he is listening, he will be surprised. It is because of mainly transportation. Electric power, yes, many power stations are in Bihar, but they are all now mostly taken over or installed by NTPC, which are among the best and efficient operating stations. They are least contributing to pollution, I will say. Industry contributes 16%, residential and commercial contribute 8%, and other wherever non-fossil fuel combustion-based processes takes place contribute 8%. So nowadays, globally, there is focus on transportation because a lot of work have already been done in electricity sector and renewables is in the focus globally. With this, let us look into this increase in CO2 concentration, how it is reflected in global warming. Since 1850 onwards, these data are available and they speaks about the trend between 1850 to 1975, though temperature was seen to be rising, but it was not disturbing. What we see 1975 or onwards till now, the slope is very steep. As a result, last 40 years, whatsoever has happened, we are facing the repercussions today. Climate change is one of the world's most pressing challenges today. Human emissions of the greenhouse gases increased global temperature by 1.17 degrees centigrade if we talk now the month of July 2023 in comparison to pre-industrial times. A changing climate has a range of potential ecological, physical, and health impacts, including extreme weather events, what we are visualizing, such as floods, droughts, storms, and heat waves. I will add up fires and so many more we will look into. Sea level rise, altered crop growth, and disrupted water systems. So now we are looking into the repercussions of industrialization. The investment of money, I will say, without having concern for 3 P's, balancing them. The 3 P's are planet, people, and prosperity or profits. So businessmen, they always remain focused on profits and ignore planet and people. Now, CO2 emission globally reached 36 billion tons per year, which is still on an increasing trend. And from where it is coming? 100 companies are responsible for 71% of the greenhouse gases emissions. That means if CEOs or board of directors of these 100 companies they in fact attempt to balance 3 P's, that is planet, people and profitability. A drastic reversal is practically possible. Now, climate change is long-term shift in temperatures and weather patterns. These shifts may be natural, but since the 1800, that is, I will say the industrialization onwards, human activities have been the main driver of climate change, primarily due to the burning of fossil fuels, which I have already mentioned repeatedly, coal, oil, and gas. These fuels are now, in addition, termed as dirty fuels as well, which produces heat-trapping gases, which are called as greenhouse gases. Now, it is time to think about global warming. Don't warn your kids' future, because in fact, present generations are playing with coming up generations' future. We need a change against climate change, and it's time to cut carbon. And these are now the global priorities. So let us look into further. See the global scenario of temperatures. The meridian line and areas along it, the dark tan color, are experiencing temperature of plus 50 degrees centigrade. The orange color is 45 plus minus, and down below likewise. The yellow color is 20 degree plus minus. Our country, Rajasthan, always remains the hottest place, but now it has spread towards Haryana, towards Madhya Pradesh, Gujarat, Maharashtra, Telangana. It has spread and area have become quite wide. Now you see that 55 degrees centigrade temperature is recorded in Rajasthan, which is 132 degree Fahrenheit, and you see the impact and repercussions yourself. These are all real life scenarios. I need not explain them. They speak for themselves. You see the industrialization focusing only on profitability. What leaders or teams are doing to planet and people. We all enjoy traveling by air, but let me remind you, it is one of the most comfortable and safest way of traveling, but it is one of the most polluting way of traveling. The most comfortable, clean, and economical way of travel is train travel. That's why Government of India is focusing on metro transport across cities countrywide. Now, satellite launch. India is doing wonderfully well, and we all feel proud of it. Definitely we must keep doing, but it has second side of the coin. Every launch adds to very considerable amount of greenhouse gases polluting environment. You see, wars earlier used to be for few months, weeks or days, but now the Ukraine and Russia war plus 500 days. And what are the effects, implications and repercussions of war? Do not require words to explain. As a result of climate change caused by human activities, predominantly through industrialization, NCR region, what really is breathing is not air. These are all different forms of oxides of carbon, nitrogen, and sulfur, thereby leading to health hazards. I am sure you all are aware of that during the month of October to January, there are many times health hazards. Even institutions are closed. Instructions are aired by different channels as per the existing or prevailing quality of air, especially warning youngsters and the elderly senior citizens. If it is not avoidable, kindly do not come out of your houses. Air is so polluted to the extent of more than 10 times the normal standards of breathable air. Now, this is the simple way. In Delhi or NCR region at large, I will say, during October to January, every individual is passively smoking about 21 cigarettes. Without knowing, you are not a smoker, not at all, no question of chain smoker. Despite that, you are smoking passively 21 cigarettes. That's the situation we have created in our national capital region. If we look into the world most polluted countries, the top 4 countries are we ourselves and our neighbors: Bangladesh, Pakistan, India, Afghanistan. And as a result, Asian continent is now the most polluted because China is also part of. If we look into the various cities, particularly the capital cities and major cities, Delhi is the most polluted city globally. And I'm sure you all experience it. If we look into the latest available list of 100 most places globally, 63 of the 100 are Indian cities. You see the tricolor in each columns appearing so repeatedly and frequently, they adds up to nearing 2/3. And that's why we are living now in a very different country, which is globally situation is poverty, corruption, violence, food shortages, usage waste pricing. As Suman sir have given example of tomatoes referring to Karnataka demand supply scenario. Homelessness, caring for people's happiness, education, healthcare, pollution, climate change, carbon footprint reduction, security management, political issues or decisions, wars, improving employees' morale is a great challenge, maintenance of equipment, increasing yield and food supplies, taking care of stray animals, sorting of garbage, saving endangered animals, distributing products for free, reducing electricity costs, siege and species debris. We will look into nuclear weapons and at sum of all these sustainability. So this is the present global scenario wherein we are a citizen. Now, sustainability, why ESG? These are my own conclusions based on overall in-depth research. Living conditions and standards are rising continually, no doubt about it. Natural resources are concentrated at few locations and thus requires trade and transportation. We can take example of, say, the fuel oil or the natural oil. Exploitation of natural resources is rising unchecked, causing distress and price fluctuations. Change in land use pattern, cities are in fact broadening and widening in all directions, and not one city or so, but all the cities, all the towns. As a result, change in land use pattern has become a big threat to India and globally. Reducing forest cover, water shortages, and desertification are the results. Pollution and temperature are continuously rising and reaching to extremes. Forest fires, industrial fires, residential and commercial complexes fires are rising world over in intensity as well as numbers, frequency. Presently, China, USA, and India are the top 3 emitters of CO2, which are responsible also for climate change. Climate change is getting intense and showing its effects increasingly world over. High temperatures, droughts, pollutions, and floods are experienced now even in our heaven on earth, as Kashmir, in Kashmir. Progress of business is continuing at the cost of people and planet. So I will say, Suman sir, you kindly take a note. Fossil fuels used in generating electricity are termed as dirty fuels. We have already seen. Energy crisis is once again looming globally and prices varying unchecked. In fact, let me quote my son and daughter both are in London. Last less than 12 months, energy prices in London have risen by about 40%. Ecosystems and biodiversity disturbed and distressed to the point of no return in many countries. Sustainability is a matter of utmost concern and priority globally. Sustainable business practices are prioritizing 3 P's: people, planet, and prosperity, which is need of the call and more so a concern for the executives and experts of financial domain. Ecosystems, sustainability, responsible investing, resource conservation, energy efficiency, energy transition, renewable energy, ESG performance are among the global top priorities. So this topic is in fact very deep, wide, and it requires a lot of time. But if you feel it is to be terminated here, for me there is no issue. Let us take up some questions and then we can, as you desire, please. So tell me, Dr. Gaurav.
Yes, sir.
What to do? What do you want?
Yes, sir. You can continue, sir, till 11:30. Yes, sir.
Okay.
Yes.
Fine, fine. So just I am taking only 15 seconds and I will continue. So I have about 20 minutes to go, right?
Yes, sir. Yes, sir.
So here is the temperature, in fact, a trend along with digitized values. How temperature kept varying over a period of time, beginning 1880 onwards, and the present scenario, which speaks itself for 14.82 degree. So if we take difference between 14.82 and 13.73, it is as per this one 1.09. This is updated up to 2021. 2023 figure is 1.17 degree centigrade change. So the average global annual temperature hovered around 13.7 degree centigrade from 1980 to 1090. During 1020 to 1040, temperature climbed about 0.1 degree centigrade each decade. Mean global temperature then stabilized at 14 degrees centigrade till 1980. Subsequently, temperature is rising and recorded 14.82 degrees centigrade during 2021. 2022 is recorded as the 6th warmest year. We will look into what are the warmest years. So this is average India temperature within our country, the average temperature profile during the period of about 40 plus years. We look into the digital here during 2012 to 2021. So temperature have fluctuated between 24.77 degrees centigrade to say 25.27 degrees centigrade, right? So temperature, this is the pattern. The peaks are the highest temperature and valleys are the lowest temperature, but country as a whole, average annually. And the temperature in India average 24.41 degrees Celsius from 1901 until 2021. Reaching an all-time high of 25.48 degrees Celsius in 2009 and a record low of 3.49 degrees Celsius in 1917. Now, the hottest decades is 2011 to 2020. And the hottest years in history, 2016 is yet the hottest year, followed by 2020, 2019, 2017, 2015, 2021. It is post lockdown period. That's why 2021 has come so down. And 2018, 2014, 2010, 2013. So herein we see the gone decade is the hottest decade. This river you are crossing, most of you whosoever are traveling from Delhi to your campus in Greater Noida, the river Yamuna. More than me, you must have seen its changing color and the quality. Herein these shots are real shots of river Yamuna a day after Deepavali, and then especially on Chhat Puja day, wherein females, they are worshipping river Yamuna on one side, and youngsters are enjoying the selfie in same river without knowing what really it is. So see the level of ignorance, but the enjoyment out of ignorance. So that's why we need to understand what is the scenario. We have seen the atmospheric conditions of NCR region. Here you see the water body, the main water body of the capital, river Yamuna. Earlier we have seen the cleanest river on planet, the river Daoki in Meghalaya. So what human activities have made a change, you can yourself make out, think of. To what extent industrialists or the decision takers have focused on finance, ignoring planet and the people. That's why the repercussions we are facing. See the garbage. Even villages are no exceptions today. Leave about the metros or the major cities. In fact, metros and major cities now, waste is getting converted increasingly into energy and wealth. But think about villages. We need to do a lot, and these things are very common. You see what we did to water bodies, including oceans. And microplastics is one of the greatest challenge of the day. Microplastics are present in atmosphere, in water, in all whatsoever we consume as food or drink. So climate change is reflecting in various ways. Dust storms are very common during summer months in Rajasthan and surrounding states, including NCR region. You are all witness of it. Forest fires, you see the havoc caused. This year, repeated fires have taken place in USA, France, and many European and American countries. This year, in fact, we did not have any serious fire. These are all fires happening in industrial complexes, in cities, including even a Bombay transport bus, DST bus. Last year, we had very serious fire in the month of March 2022. It was historic that Indian Air Force was called to quench the fire, which also took substantial time to deal with. Now, the floods or the cloud burst, we all must be remembering the Kedarnath incident, which happened in year 2013. You see the visuals. So at one side, we are creating wealth. At other side, what is happening, we ourselves visualize. You see, this is the latest, Mandi, Himachal Pradesh. On the very same day, this is the scenario. We have seen Kedarnath temple in previous slide. This is another historical temple, which is known as Panchavatra temple. Is historical, very popular, and alike Kedarnath in Mandi, Himachal Pradesh. So side by we see a bridge which was washed out. and not only one places, Uttaranchal, Himachal Pradesh, Gujarat, Maharashtra have seen repeatedly the havoc this year in intensity as well as the frequency. So 13th July, this happened in fact in Himachal Pradesh, that is Sangam of river Byas and Suketu, where this Panchvatra temple is there. Now, on the very same day, on one side, it was what we have seen in previous slide. On other side, in the month of July, Himachal Pradesh have experienced snowfall more than a meter in a day. As a result, what happened? On 13th July 2023, 256 tourists stranded at Chandratal. Is a very popular spot for tourists. Now, you see here, these are the scenarios which are becoming very common on not one place, but countrywide, and not India is not exception globally. I'm sure you must be all remembering this one without any exception. This happened in your neighborhood in Greater Noida itself, wherein more than 350 luxury taxis owned by Ola, they have seen and experienced. You think of 350 luxury vehicles in one place. What is the scenario countrywide or globally? So are we really adding to prosperity and profitability by our decisions, or we are in fact destroying what really was created? Is a matter of serious concern. This is a village in Maharashtra wherein during sleeping time in night, one mountain, it slid back and caused havoc. Full village was washed out. Now, Earth hottest day. It happened previous month, 4th July 2023. And temperature has gone, this is overall global temperature, as 62.6 degree Fahrenheit. Prior to that, it was 62.4 degree Fahrenheit, which was recorded in hottest year in the same month, July 2022. And now you see one day change. On 3rd July 2023, the average global temperature was 17.01. On July 4, 17.18. So these are the globally hottest temperatures reported and recorded in history till date. Now, 54% of our country is facing water shortage because of quality considerations or quantity considerations. 54% is a huge area. Almost 60% of population is facing water issues. In fact, I must appreciate our government and Niti Aayog in focus, who have come up with variety of schemes to implement through Jal Shakti Mantralaya across country by linkages of rivers, direct water supply, potable supply to houses countrywide, and so many. So what now we feel, where we are? What about the climate, the ecosystems, and the sustainability? I think I could not do much justice than what I attempted in this single slide. So what humans and decision takers we are doing? Survival is a great question. It's already getting too late if we do not act. Now see the present scenario again. So climate change led to heat wave in Europe. And what happened? Europe heat wave, deadly wildfires spread in Mediterranean on 17th July 2023, just previous month. Heat storm stretches into southern Europe. Health alerts issued. These are the health alerts now being issued in developed countries as well. Now, what our Secretary General he observed on 27th July 2023. Let me quote him. He is saying the Earth had passed from a warming phase into an era of global boiling, he said at the United Nations headquarters in New York. His comments come even as scientific evidence converges on the conclusion that July 23 is said to be the hottest month in the last 12,000 years. He quoted on 27th July. So realize where we are leading to. The era of global warming has ended and the era of global boiling has arrived. So this is the critical juncture by ESG. Before than that, let me just put up, you have all seen through visuals, the climate change causes, effects and impacts. So kindly, I will leave it for a few seconds. This presentation will be shared with you, need not worry, and these are the major causes leading to effects and impacts. I am moving quick. In the present time, sustainability refers generally to the capacity of Earth's biosphere and human civilization to coexist. Sustainability is the capacity to endure in a relatively ongoing way across various domains. It is the ability to be maintained at a certain rate or level. The pursuit of global environmental sustainability has become critical. The sustainability of economic growth, avoidance of the depletion of natural resources in order to maintain an ecological balance is at critical juncture. Now, sustainability is summarized in single slide, addressing the 4 quadrants as ecology, cultural, governance or political, and economics or the industrial, in simple terms. If we look into the present scenario, ecology has deteriorated to 56%. 56%. Cultural change is just 17%. Whereas governance changes are 23%, deteriorations 23%, whereas so much efforts, everything being focused on profitability, here it is just 76%. So in nutshell, what are the concerns, sustainability concerns? What we see in first quadrant, in priority they are energy and materials, emissions and waste management, water and air, food and health, flora and fauna, production and resourcing, consumption and usage, construction and shelter, communication and movement, wealth distribution, labor and welfare, laws and justice, places and spaces, beliefs and meaning, and memory and projections. I'm sure these issues, many of them are very new. They require a lot of explanation and discussion, but time do not allow, and I don't have any option but to move quickly ahead. So these are pictorial way, and they have many elements within every pull if we open for. So this is again very serious situation. Earth overshoot day. Earth overshoot is what? The natural resources recouping capacity of Earth and the ratio with the rate at which community globally is exploiting and consuming those resources. So this ratio has become 1.7. That means this year during 2023 on up to 2nd August, we have already consumed the resources what could be revived or recovered during 2023 as a whole. That means 3rd August onwards, we are putting our planet again in very difficult situation and pushing it in unstable zone. Now, I think, Dr. Gaurav, I must stop here and ask for questions, if any, from participants, including Suman sir. I will be happy to answer, sir.
Okay, thank you. Thank you so much, sir.
Thank you, Sushil ji. Quite an interesting session. What intrigued me is the last slide where you have said that memory and the area of concern, memory. What is that exactly? Because the rest of the stuff you were quite bang on target. That is quite new to me, and so the question. Thank you. Very interesting session.
Perfectly. Sir, we refer to the natural clock and the biological clock. And I am sure you are one of the practitioners keeping your biological clock reasonably synchronized with natural clock. If we are really at large balancing and keeping these two clocks synchronized, then there are no issues. But now what is happening with great decision takers? We come to listen and see ourselves CEOs. They become CEO in the 20 to 30s, and at times there are now increasing incidences where we come to know that CEO is no more, is already passed away. Why it is happening? How it is happening? It is because of lot of pressure on mind. As a result, memory get disturbed, distorted, disconnected, and it leads to lot of undesirable scenarios which we listen. This is nothing but desynchronization of natural clock with desynchronization of our human biological clock with natural clock. There used to be, and even today we also use it, early to bed, early to rise keeps a man happy, healthy, and wise. So what we want? For what we are living, sir? We are living for being happy, healthy, as well as wise. But what we are doing? Are really we working on this way? Are our actions and decisions are in synchronization or not? If they are, fantastic. If not, we must think of. I wish, sir, I have answered your question.
Yes. Thank you, Sushilji. Thank you.
Now, kindly come up
Thank
with
you so much, sir. Sir, yes, sir. Thank you so much, sir, for the wonderful session. And you have made an interactive session and very informative session. So kindly accept the memento of gratitude from the Galgotia University on behalf of organizing committee of this FDP. Kindly accept the e-memento, sir.
Sir, definitely, it's my pleasure. But let me quote while accepting this memento. I will not be doing justice to the fraternity, which is right now 300 plus. If I do not complete this content, which really is not possible and has not been completed, it is done 2/3, and the ESG portion has remained to be seen. So I am not going to ask you to do it today, but whenever you feel, I will be more than happy to come back to you and enlighten the fraternity of not only Galgotia campus, but as you desire, please.
Yes, sir. Yes, sir. I participant. If you have any query related to social sir presentation and talk, you just put me the message. I will forward to Sushil sir, and I will take a session from the Sushil sir to address your all query in upcoming days.
Thank you, Dr. And Professor Gaurav. You are doing wonderful job and keep doing. We are with you. Let us enlighten young minds as we can using our own learnings and experiences so that they are aware of what really is the present scenario and where they as a citizen or as a responsible corporate contributor wish to take away or take forward.
Thank you.
Thank you,
Yes,
everyone.
Thank you,
Thank you,
so
madam.
much, sir. Thank you so much, sir.
Thank you. Should I will just keep listening next session also.
Yes, sir. Yes,
I
sir.
was very
Yes, sir.
happy to
Please,
listen,
sir.
but I will keep silent.
Yes, sir. We will fortunate, sir. Yes, sir.
Thank you. Thank you. Go away. Go ahead.
Yes. Thank you, sir. So, dear participant, our next speaker, Mr. Manvin Singh Chadda sir has joined with us. He will give a keynote address on business opportunity identification, source of information. So, Manvin sir, we are very grateful to you for you have accepted our invitation. And Mr. Manvin sir is a steadfast at developing a pipeline of promising deep tech startup with a vision to enable innovation and contribute towards the nation building. From the designing, managing incubation program to hand-holding startup to excel in the ecosystem, Manvin sir has led various capacity building efforts and technology-based entrepreneurship program, including Delhi Innovation Summit and Sonipat Startup Summit over the course of 10 years of his career for boosting entrepreneurial culture among the student, innovator, startup, and employed youth. Currently, he is working as a senior manager incubation at FIIT Delhi, Foundation for Innovation and Technology Transfer, IIT Delhi, and he has held various positions, including Chief Executive Officer at Innovation Center, Incubation and Linkage. He has also held Senior Incubation Manager of the Santosh University, Ghaziabad, and Incubation Manager of IIT Mandi Catalyst. So we are very grateful to have you as a speaker, sir. And we are eager to listen you, sir. Over to you, sir. Yes, Manvin, sir. You are muted, sir.
Yeah, am I audible now?
Yes, sir. Yes, sir. Now.
Okay. Can you see my screen, Dr. Gaurav? Is it
yes,
visible?
Sir. Yes, sir. Yes. Yes, sir.
Okay. So thank you, Dr. Gaurav, and thank you, Galgotia University, for inviting me to deliver a session on sources of business. So we'll talk about more about how to generate ideas. And since session has to start at 12 o'clock, but because of the last session, which was very interesting by the sir, and it got extended. So we'll try to sum up all the techniques that I want to share with all the participants in a very short time. I hope I'm audible, Dr. Gaurav. Just let me confirm
yes,
so
sir.
that
Yes,
I can
sir.
move
Yes,
forward.
sir. You are audible.
Okay.
Perfect, sir.
Okay,
yes.
Sure. So when we talk about generating ideas, we always say that either ideas will be of your own or you're trying to solve some problem which are already existing. So there might be some solution which already exist into the market, such problem statements, and there might be some solutions which are existing. But we always goals and we always look for pain point of the customer and try to modify the existing solution and come up with the new ideas. Or there might be some solution which is totally new problem statement. None of the startups or I would say any innovator has worked on that earlier, and we come up with a totally unique solution. So we don't have any existing competition in the market. So these two kind of ideas would always be there. Either an existing idea you will work upon or will be a totally new idea that comes up into your mind. So we always say that, as I already mentioned, that you will stand out in terms of when you think about idea. So what you basically stand out uniqueness. So we always say what is the unique in your product. So the first and foremost thing is the technology that we talk about, whether the technology that you're working is totally unique, or maybe you have added some of the features which are new and you have understand the pain point of the customer, and then you have put in some new features into the existing product and you are trying to solve some more niche problem of the customer. Or secondly, there might be something totally unique which is never existing into the market. You are trying to come up with some patenting technology and then you launch that product into the market. So why I'm telling this, because accordingly your problem statement defines the customer onboarding and also the geography part where you are targeting the customers. So these 2 points basically always depends upon the kind of solution you are providing, the kind of problem statement you have selected. So your problem would always fall into any of these two categories. When we talk about startup comes up with any of the problem statement, their solution comes either under vitamin category or a painkiller category. Why I'm saying this? If I ask all the participants, what is the difference between vitamin and painkiller in terms of medical? So maybe you can easily tell. Any one of you, Dr. Gaurav, they are allowed to speak in between.
Yes, sir.
Yes, sir.
We have granted
Okay,
the
so
permission to unmute
okay,
themselves as well as
sure,
he can
sure.
show
So if
their
any, so if any of the participants would like to add, what's the difference between vitamin and painkiller? A general definition. Any one of you?
Hello.
Vitamin is health.
Yes,
Vitamin.
sir. Vitamin
Hello.
is a
Yeah, I think maybe ma'am can go
nutritional
first and
for
then.
your body,
Okay,
and painkiller is a to heal your pain.
to heal your pain. Okay. Anybody else? There was one more sir who was saying something.
Vivek
Sir,
here.
painkillers.
Vitamins are health supplements
Okay,
which improve your biochemical functions of your body actually. Okay.
right,
But the
right,
painkillers are pain relievers actually. They are the medicine. They can
right.
reduce or relieve some pains or like that.
Sure, sure. I think on the backside. So basically, in the similar fashion, whenever we start to work on any of the idea, it falls under vitamin and painkiller, and how such I've given an example. So if I ask all of you, all the participants who come from maybe XYZ place to work at Galgotia University or maybe at their different respective places where they're working, I hope 90% of you will always try to open your Google map in the morning when we are driving. Why so? Still we know that this is my path A to B and this is the route that I have to follow when I go to office daily. But still I will open Google Map because I never know what will be the real time situation so that I don't stuck into the traffic. And if there is any alternative route, I can immediately get that information in a very nanoseconds. So Google Map is a kind of solution in my sense, which comes under a painkiller category. It's a kind of solution which everybody needs. It's like any generation, any people, any geography, even if you're moving in a smaller cities, people are opening Google Maps, people are using Google Maps. It's now not only confined to the metro cities, even people in smaller cities, they are using Google Map to move from one place to another. So I take it in a category which is a painkiller and it trying to solve some solution which is not a niche. It is like a total market. It's not only about traffic. Then they slowly come up with how to grasp more people into their app. So they try to connect maybe restaurants, maybe petrol pumps. So it also shows you the nearby location of various places. So when we move to any new place, we would like to know which is the nearest restaurant where I can have food. So I can get that detail now in Google Map also. Also, they have tried to come up with new solution, which was not there initially, the speed of your vehicle. So while moving in many of the roads, we see that there is speed limit in Delhi. So Google Map is showing you the speed also. So depending upon the pain point of customers, Google is adding new features day by day. So according to me, it's a painkiller solution. My existing maybe wear bands, but I would just get some information related to my health parameters. But even if I'm not wearing it, still I'm good to go. I'm doing my daily work. But when I talk about Google Maps, so it's like something which comes under a painkiller. If I will not use it, maybe I will miss something or I will not be able to do my daily task. So according to me, these are the two examples. Maybe according to you, there might be some other examples existing. Or maybe some of you will say that no, sir, Google Map will not come under painkiller as per me, my my thoughts. So it's all depends upon person to person, but as per the detailed driven app Google has created, according to me, it comes under a painkiller category. Moving ahead, when we talk to startups at a very idea or a prototyping stage, we always tell them that it's better to run towards a quality. You should not run towards quantity, because that's your first product, maybe some of the few initial products that you're going to launch into the market. So it's better you should focus more on your quality, even if it is like putting more money into that product building. It's better to go ahead with the quality, and then with the period of time, as you start getting feedback from the customers, you can do several iterations to reduce the cost of the product, and then maybe you can start moving towards quantity instead of quality, because at that point of time you have already achieved the quality part. And we always say that start small and scale fast. What's the meaning of this start small and scale fast? It means that even we saw that startups tried to build each and everything A to Z. That's why I will build this also. For example, I have seen startups who are working in EV. They are trying to work in motor also. They are trying to work in controller also. They are trying to work with EV charging stations also. They are trying to reduce the EV emission carbon credit also. So you're trying to do everything, which is not possible. It's better to focus on first, maybe on motors, maybe on controllers, which is your skill, which you are technically sound, and then start small. So try to come up one by one with the product, try to get the feedback from the customers, do the iterations, complete the first part, and then try to bring more features into your existing product. Now, I maybe because there are a lot of faculty members joined here. How many of you have already heard about this camper technique? I hope many of you have already might have gone through this camper technique. Anyone here? Because there are a lot of faculty members, so maybe they have already heard about this camper technique. Dr. Gaurav, I hope I'm audible.
Yes, sir. Yes, sir. You are audible. Yes.
Anyone who have already heard about this camper technique before this?
Sir, scamper technique, is it brainstorming technique, something like that?
Yeah, so it's
They used to
basically how
develop
you
some.
should it's basically how you should think about if let's say I would say the existing products into the market. For
Yes,
example,
sir.
bicycle. So if I ask you that bicycle, we already know what all is there, gears, material that is used, iron, metal, and all. So it's an existing product. But if I say you that use a scamper technique and try to come up with some different product, same thing bicycle,
Yes.
but made of some other stuff. So for that we use
Okay.
scamper technique. So how to generate ideas? For that, scamper is one of the creative thinking technique, and this is the full form of scamper, where S is substitute, where we talk about replacing material, replacing any part according to your creativity, according to your innovation, and C for combine. So if it's like, I would say that, okay, what all you can combine together to build a new product. So maybe I can combine 2-3 different products to build a new product. Then A for adapt, M for modify, P for put to other use, E for eliminate, and R for reverse or rearrange. So this you will find anywhere in the Google. This is the full form, and accordingly I will tell you how this scamper technique works. So I'm trying to put scamper on a water bottle. So if you all agree, into early 2000, this was the only uh, plastic water bottle Bisleri, which we used to have. There was no other water bottles like we used to have now, water bottle for kids, or maybe plastic has removed with ceramic, copper, and lot of other stuff. So how companies, their R&D department start thinking about this, how they thought of key, let's bring an alternative to plastic. Let's remove this. Let's bring a style to the bottle, why it is required, how they come to understand that kids may require a different kind of water bottle. So all these brainstorming comes through scamper technology. So when we talk about scamper, now I will put scamper on the water bottle. So this is some of the changes that you are seeing now in the existing market. If I talk about S, which is substitute. So some companies R&D thought of how plastic can be substituted with any other material. So they thought of come up with steel bottle, then they come up with copper bottle, then they come up with ceramic bottle and different others. Similarly, if I talk about C for combined, so they might thought of the water bottle, simple plastic water bottle can be a market, a big market for kids who are going to school. So we can have stylish handle, we can have sipper, a different model, different changes according to the need of the kids, and we can combine other things to make a different kind of a water bottle for a different kind of customers, depending upon the pain point of customer. Similarly, if I talk about adapt, so initially plastic water bottle was round, and if you will see this kind of plastic bottle you put on your table, and if somebody just push your table, this plastic water bottle will fall down. So companies thought that we should have a square shape water bottle so that it should not easily roll away. It should not fall easily on a table or anywhere, wherever it is kept. Similarly, if I talk about modify, so now you all have seen that we have a water bottle where you can modify the size, shape, and you can modify the that brush which we used to put inside the bottle and then clean that bottle from downside. So why don't we have a water bottle which can be open from both the sides? So that is easy to clean. It can be open from down also and it can be open from upside also. So both sides opening help you to clean your water bottle easily. Last but not the least, eliminate. So how you can eliminate? It should not be a water bottle, it should be something else. So for example, we have now bag shaped water bottles. So why it is required? Somebody understand that cyclers need a water bottle while they are cycling. And always when they used to drink water, either they have to stop cycle and drink water, or maybe while driving the cycle, they just pick up the water bottle from the cycle and then drink and then put it back. So why don't we have such bags which are not a water bottle shape, but maybe a bag shape, and there will be a water inside it and a sipper so that you can just put your sipper ahead, drink water and then put it back. So all kind of pain point once you understand of the customer and then you start applying scamper. So these all required a lot of market survey before you start building any product. You do a lot of market survey. You first start with a simple paper prototype and you ask questions to your customer that would they need it, would they pay for it, would they require such solution or not, and then accordingly you start building the MVP next, the minimum viable product, and then you do a lot of iterations with that, and then finally you come up with the final shape product which your customer required. So this is how scamper can be used in other existing products also. These are some of the more examples. So if I talk about roll-on deodorant, it was the idea which was adopted from ballpoint pen. So somebody thought that a kind of a ballpoint pen, we can have a roll-on deodorant also. Similarly, if I all ask you, McDonald's was the first restaurant who start that first you will pay and then you will eat. Initially, before McDonald's, this was not the concept. You first go sit into the restaurant, eat your food, and then in the end you ask for bills and then you pay. But nowadays the schematics is only changed in most of the restaurants. You first pay and then you sit and then you have your lunch or dinner or whatever. So McDonald was the first one who started this change. Now some of the creative products that I want to discuss which already exist into the market, maybe you have seen. So at a time I can put water in 2 glasses instead of putting in one. This you might have seen a lot of places because of space crunch in metro. People have this staircase where they can put their shoes and all racks. Now this is one more where you can have toaster as well as tea maker both. So combined you can have toast as well as tea ready. People who are in hurry in the morning. Similarly, you can have one more biscuit space inside your tea cup so that you should not use separate plates for keeping the biscuits. Now we'll move to the next concept where we talk to this was till the we talk about product and product. Now what other than product, once my product is built, what more is required as a founder? As a startup, as a founder, you not only have to focus on the product development, that is one part, Once the product development is over, then you have to look for the market, and you also have to understand the overall ecosystem that is provided by government, provided by investors. So you have to learn each and everything being a founder. Once the product is ready, now what next? You have to look beyond the technology. So I asked one question from all of you. Can the selling price below the cost of material? Is it possible that I have my selling price below the cost of material?
I don't think so. It's profitable then.
Can be possible if there is a subsidy or return is possible.
Subsidy or anybody else has any suggestions?
Sir,
For time
any
being,
difficulty, sir?
for
Okay.
time being, it's
So,
possible. Actually, just like
the
Geo.
next question is, can you tell me some of the cool, innovative product that you have seen, or maybe you are using? Either you have seen in the market, or maybe you are using it right now. So, according to you, what is the cool, innovative product that you have seen? Anyone has any inputs? We all think that according to us, there might be some cool, innovative product. So either you have seen in the market or you're using such products. Can you tell me any of the innovative products according to you?
Bluetooth keypad for computer, Mac, and Android as well. At the same time, it has the connectivity.
So am I audible?
Sir, I think you are muted.
Yeah, am I audible now?
Yes, sir.
Yeah.
Many of the cosmetic products usually they were going to come in the different dosage form, like cream applications were there. Right now they are using the pump and applicator so that we can just use the pump and get a specific amount of product. So instead of that, they are also using the droplets. Many of the serums are right now available in the form of a droplet, which was not earlier available. So these are for new modifications or the new innovations available in the market, so that the better absorption and the better availability is there in the skin.
Okay, great. Anybody else, according to you, the innovative product?
I think I'm audible.
Yeah, you're audible.
So as I can see that there is a nanotechnology based paint actually.
Okay, yeah, right.
So that kind of nano paint are there. They are applied to the additional layer on the exterior surface of the vehicle, and that forms a protective layer against dust and water and oil. So it's very easy to clean. This
Okay,
kind of product.
got it.
Yeah.
Got it. Anybody else? Anybody wants to add something to the innovative product? I think we all have some answers. We all think that there is smart board, right? Okay. Anyone else?
So the sudden shift of the pharma industry to the nutraceuticals and health supplements suddenly.
Okay. Right.
In the last
Right.
few years.
Right.
Because
Okay. Great.
people are getting more and more interested in it, especially after COVID. So more of these supplements are there, and the multivitamin tablets and all, they are more in the market.
Right. Okay. So if we see all the solutions according to all the participants, the innovative stuff, we see there is a technology. So whenever we talk about any innovative product, we always talk about technology. Now I'm going to talk about one thing is how can the selling price be below the cost of material? What will be the possibility? And how people think about innovation. It's not always the technology. If we talk about, sometimes it's also about understanding the overall ecosystem. So I hope you all have seen this fan blades. We all have fan in our house, and this is called rivets. So in early 90s, I'm just going to share some real story which talk about how we have to look beyond the product innovation. So in early 90s, there was one manufacturing company of utensils, and there was one more company which works on this automatic riveting machine. So they were based out of Bombay, and this manufacturing company of utensil, they asked this automatic riveting machine manufacturer that we need such automatic riveting machines because this same machine is used for utensils also. As we have seen the fry pans and all, they also need all that rivets in that, which has to be joined together. So initially this was all manual. There was no automatic riveting machine, and they used to have 3-4 people who used to assemble each and every part, and it takes a lot of time in the production and finally to build the final product. So the manufacturing of automatic riveting machine who was doing all this manually, he thought of building this automatic riveting machine and come up with this automation so that it increase my productivity also, and it also helps me to sell the machine to the interested buyers. And there was one interested buyer who say that if you build this automatic riveting machine, I would like to buy 8 to 9 pieces every year from you. So he started building this machine, and finally he come up with this successfully with automatic riveting machine. And he started selling 8 to 9 pieces every year, and the customer was very happy, the utensil manufacturer. And why he was taking this 7, 8, 9 machines every year? Because they used to get bulk huge order from one of the Gulf company of you who needs this utensils, which an order of around approx 50 lakhs in 90s. So it was a big order. And they were happy. Everything was going round the year for another 10 years. And then suddenly, no change, same methods, same thing. He was developing automatic riveting machine and sending it to this buyer who is interested in taking this every year, 5 piece, 7 piece, 9 piece. And then income was increasing, order was increasing, everything was going fine. Suddenly in early 2000, this person who was building automatic riveting machine, he didn't get an order one day. And he was shocked that this time in the month of July, I used to get an order from this company. Why I didn't get an order this time? So he went to that company and asked that why the order is not given to me. Is there any other existing player now who come up as a competitor? So they said, no, we are not giving you an order because we have also not received an order from Gulf company. So it was a sudden shock to utensil manufacturer that how come my customer is not giving me an order which has a big, huge book order of approx 50 lakhs, and suddenly the customer has denied giving order this year, and they try to find out that who is now the new person to whom the order has been gone, and how come he is providing the same material, same quality, same durability in a less cost. Obviously, it was a cost due to which Gulf people moved to some other person, and that company was in Delhi, and he was a startup. So startup, that time there was no such startup, but I'm calling it a startup because he was new into the business, that person who was in Delhi. So suddenly they find out that the difference is in the cost. They used to sell per piece around 180, 190 rupees, and the same Delhi organization person is selling it at a cost of 130, 135 rupees. So this Mumbai utensil manufacturer was shocked that why this Delhi person, and they figure out everything. They find out that this person is not into the business. He is new into this business. He don't have any such good family background. And 15 lakhs if we talk about the overall order. So that time what happened, this Delhi chap, he studied the overall ecosystem and find out that there was some facility provided by government, which is a duty drawback policy, according to which whatever I am exporting, if let's say I'm exporting something to Gulf country of 50 lakhs, I can import any material from Gulf to India of the same amount. And that should not be a same material, anything, even if I'm selling utensils, but still I can order or import 50 lakh amount of any item from Gulf to India. So he find out what will be that item that I can import from Gulf and people required in India. And he got 3-4 buyers